Keenan is back in the tuxedo for an AMC stock short squeeze update. It is bound to be serious.
This episode is brought to you by the public investing app. Use the link pinned to the top comment to get up to $73 in free stocks. But without further ado, this is not financial advice. I just hope a bunch of other myths, baby, because it's about to get hot in the kitchen. Make sure you subscribe to the channel, hit the notification bell, because we have to get this information out. YouTube, they suppressing the numbers. They don't want the financial literacy to be spread throughout the community. But
I can attest to that.
I'm not having that. You already know what time it is, family. If you're not having that too, make sure you hit the like so we can get the information out. Now, let's talk about it. We got to talk about the beast, the big dog, the banger, AMC Entertainment, ticker symbol AMC. And I'm not telling you to buy, hold, or sell. I'm giving you the facts. And you know what the fact is today? Mainstream media, they starting to go on a smear campaign on who? None other than the CEO, Aron. Watch this. Market Watch, again, allegedly, supposedly, hypothetically, right? Nobody's trying to get sued, even though I'm coming with the receipts. Market Watch just posted this, and they're trying to stir up an issue, in my opinion, where there hasn't been one before. AMC CEO, Aron, total compensation in 2 years during the pandemic is more than the previous 4 years. So, family, this is like when you're watching a sports game, and then they tell you, you remember that this dude just broke a record. You say, okay, what record did he break? And then they tell you, in the third quarter, with 5 minutes left, he made the most 3-point shots on the Thursday. And you're like, yo, where is this random kind of a fact coming from, right? So random. They just compiled this. Why did they compare this to all time? Why did they compare this to other things that will make a lot of sense, right? Because they're trying to just make an issue where there hasn't been one before to kind of stir up the...
There definitely has been one before there. We talked about this last year, actually. We talked about this last year, the fact that Aron's compensation in 2020 went through the roof. But, you know, it's just now hitting the mainstream grifters. But it's interesting that they do bring this up now. Yeah, and, you know, compare the 2 years compensation to something that makes sense. Oh, like, I don't know, like the previous year's compensation. Okay, let's see where he goes with this. How he, you know, rationalizes this.
The crowd. So, check this out. It says that Aron in 2021, his compensation was 18.9 million. In 2020, it was 20.9 million. And then they said, but before, in 2019, it was 9.6 million, or yeah, 9.6 million, and that's 2019. But check this out. They even defeat their own argument in here. Check this. It says, special incentives are for extraordinary actions taken by the management during the pandemic, right? Now, why is that important? Because the stock price soared over 270% in a little bit of time, a very brief amount of time, family. Now, keep in mind, AMC used to be like $4.
Well, wait a minute though.
70.
Because the extraordinary actions taken by the management team during the pandemic. But that's in 2020. So the apes hadn't stepped in yet in 2020.
Because the stock price.
And then the stock price soared in 2021 because then retail investors stepped in. So it's not defeating its own argument. It's not really. It's highlighting random words and then missing the overall point.
Soared over 270% in a little bit of time, a very brief amount of time, family. Now, keep in mind, AMC used to be like $4 a share. It shot all the way up when he was getting
those were the days.
To $70 a share. Now, it's not necessarily just because of the actions done by the management. It is also due to, let's call it the hedge funds, the manipulation, all of these things, the little precursor of a real short squeeze, things like that have led to AMC running up. But guess what? When the stock is running up, there is going to be more compensation because it's just the way that the game goes. Right now, you be the judge whether you think it's fair or not, but this is just the facts. And then they said the stock plunged basically 69% in those previous 4 years when he wasn't being compensated like that, but they saying that it soared like crazy when he was being compensated. Doesn't that make sense? When a business that you're running basically is losing money for 4 years straight, you're not getting paid higher and higher and higher amounts, but then when it starts to take off and rocket, you are getting paid?
Started to take off. It didn't start to take off until 2021, though. Why did he get compensated in 2020? You're missing the point, Keenan.
This is a nothing statement, family. This is how I'm looking at it. This seems like a mainstream media smear campaign, allegedly, supposedly, hypothetically, right? You be the judge. You let me know your thoughts on that in the comments. Do you think that when the stock is soaring, CEOs should get paid more? Or do you think that it should just be a flat rate all around? Or you let me know in the comments. So now, other than that, AMC theaters, they're going to announce, and they actually announced it today, but they're going to announce their first quarter earnings. When are they going to do this? On May 9th. So keep an eye out for that so we can see how it's going. Now, basically for the past 4 quarters, I want to say, they have been going up and up and up and up in terms of where their revenue was. Now, for January can be a little bit slow for movies. It's not like the summer blockbusters or the Christmas blockbusters that come out. So you imagine that the earnings is going to be a little lower than it was for the whole year coming up before. But that's expected. It's just a cycle, family. It's the way that things go. So now they announced it basically April 29th, and their first quarter earnings coming out soon. You know, I got your back with the facts. Now, check this out. I want to give a shout out to Forbes because I didn't expect this. This from them. They said this: how to buy AMC stock, and then they came out with this April 28th. So they got a whole guide as to how to go about it. They telling you, you know what, how to download a specific app to get in so you can have an app.
Wow.
Most people, believe it or not, they don't even have a way to invest into the stock market. Why? Because they just don't know. It's just straight ignorance, and not ignorance in terms of, oh, you're so dumb. Ignorance in terms of you just literally don't know, right? So you could download a lot of these apps and then basically get into stocks, right? Check this out. They tell you how to download it. They tell you how to find the stock on the apps. They tell you to have an exit strategy, which I talked about in my previous video. Many people don't have exit strategies, and then they go up 800% on something, and then they never sell it. And then remember this: they do not sell. They do not sell. They do not sell. I said it 3 times so you can remember it. Sometimes you got to say, all right, look, I'm up 1,000,000% on something. It's time to take my original investment out of it, at least, so I have no risk. We got to start taking some profits, family. Not particularly on AMC, but just in the stock market when
Well, that's good because there's really none to take there. But
we trade, not investing. I'm talking about trading. Now, let's keep it going. Remember, with AMC, you don't have to be diamond hands, but that's how many of the apes are playing it, including myself. Let's look at the institutional holdings. I want you to just see in the last reporting quarter, check this out. In green, right here in the middle of the screen, it says that they basically picked up 19 million shares. This is Wall Street. This is the institutions. These are the people doing these smear campaigns that have been loading up in the last quarter. Then it says they decreased by 5 million. So they bought 19 million, decreased by 5 million. You got to keep your eyes on numbers like this. And this is an official source. This is nasdaq.com, family, straight up. It's showing you that the institutions, what are they doing? Family, they getting in and they were loading up. But you got to keep in mind, they are doing a lot of swing trading of this, straight up, because they're trying to dig themselves out of them holes that they've been digging for the last few years. And how do I know this? When we go to the order book, the level 2 order book, where you can see all of the buys, all of the sells that are coming in, you can see that on AMC at 1525 at the very top of this blue rectangle, you'll see that somebody is trying to buy 560 shares at the price of 1525, and then right under that somebody trying to buy 2 shares, and then under that 313 shares. Now these are all of the buys. I want you to be up on information like this. You need to be able to see what's coming in, so when you get into a stock you can say, man, why that when I got in it dropped immediately? Because you don't see the order book. Let's look on the other side and see the sells on AMC. And it says this: somebody is trying to sell basically 250. So this is in the orange rectangle on the right. They're trying to sell 250 shares at the price of 1530, and right under that 85 shares. But when you look all the way towards the bottom of this orange rectangle, you'll see 1,000 coming in, another 1,000 coming in. So 2,000 shares basically being sold almost at one time. So be on the lookout for that volatility. But be surprised by this. It says that with AMC, as of Friday, the last trading day, it was a net inflow, which is crazy. Now, check this out. It says that the extra large buys, I have them in the yellow rectangle. The large institutions buying millions at once. It says they put up 14 million in terms of buying, but in terms of selling, they got 12 million. So they were doing more buying than selling. But remember, it's very close. Why? Because they're getting in and they're getting out. They're swing trading this. Now, the small buys we have on the bottom, 62 million versus 63 million of selling. So there's almost an even split from the very small buys in terms of the retail investors who are buying and selling on AMC at this current point in time. Now, the price targets, they're saying that AMC is going to $9 and then 83 cents. This is what Wall Street is saying. Always take what Wall Street says with a grain of salt. Remember that. But I do want you to keep an eye out on these two prices. The first price is $20. If we break above $20, it's very likely that we headed to $25, even $30 on a quick run up, right? Because 30 is going to be a hard resistance, but the first hard resistance it's going to resist going up is basically this $20 level. Now, if you're looking to pick up some AMC shares, you would like it to bounce off of the 13. That's a support. It's supporting it from going any lower. But if it does break that, then we headed towards those 52-week lows, which could actually bring us to that $9 range that Wall Street is trying to claim that's going on. But I got your back. I love y'all. I appreciate y'all. Hit the public link in the top comment. Again, with the stock market coming down, it's time to get some free stocks, family. I love y'all. I appreciate y'all. I see you in the Discord. But if you can't handle the heat of these hot stocks, then stay out of the kitchen. Consider investing in it.
All right. Let's see. Yeah. I gotta see the margin call Monday. Gotta see it. Any day now. Any day now. All right.
What's going on, guys? It's your boy TMI. I am the Masked Investor. Thank you guys very much for tuning in right now. No matter what time it is, no matter where you guys are, I do appreciate you guys for being here. Now, I do want to take a look at a few different things here. Margin calls, potential DTCC margin requirement changes, haircuts, you know, everyone time to go to the barbershop. I do want to take a look at AMC and the potential case they're putting against those who are running the AMC token. Take a look at this. Shout out to my guy, Vegas Chef Andrew, who is on the squad, and also did put all this information on Twitter just a few days ago. The case details for WIPO case D2022-1405, where AMC Theaters is, you know, going to complain against those who are running the AMC token. Now, the WIPO is the World Intellectual Property Organization. For those of you guys who are unaware, they definitely do keep different trademarks and inventions safe from people who are trying to infringe on their intellectual property. Now, this is great to hear because we've been pretty silent. Well, the upper management AMC has been pretty silent on this front, and you know it's a legal matter. So this is probably how they should be handling things. But we've been worried. We've been trying to say, hey, look, protect those who have been, you know, helping your company. Come on, step up. I'm very happy that I believe this will actually do something to limit the amount of issues that are going on right now with the token. But take a look at this clip that I pulled up, even on the live, of the bots, you know, running around the internet trying to actually farm people to get to the AMC token. Take a look at this clip. Take a look at this. AMC token AMC 69. It says here, make sure to be ready for the AMC token launch at the end of the month. The ape movement coin backed by AMC and CEO Adam is going to revolutionize the market going forward. Hashtag AMC, hashtag AMC squeeze. They call me Yellow Poppy. That was the last thing he went to. And then he tweeted, he answered himself. Went to AMC Bigums. Went to go tweet the same thing. Oh, interesting. Let me see here. Went to Terra Bull. Went to go tweet the same thing. Okay. Went to Road to Legacy. Went to go tweet the same thing. What's going on here? Wolf of my street. Oh, there you go. All right.
How is this any different from the nonsense that these guys put out every day? Really, how is it any different? By the way, American Multi-Cinema Incorporated, is that really their legal name? I thought it was AMC Entertainment Holdings. I don't know, just wondering.
Right now, before we get into this information, education, if not simply just entertainment, guys, smash the like button. Feel free to press subscribe.
Here
First
we go.
Intro, then the info. Let's talk about the margin calls. Weekend. I did want to come in here really quickly and make
Worst
a video.
intro ever.
I got a lot of follow-up questions after
Is
the
he
last
wearing
video
a Top Golf hat?
2 months away from a recession.
He is. Top Golf. He's wearing a Top Golf hat now. Fucking Tiger Woods here.
People seem to be confused by that. You know, these things, guys, are more facts than not. I do also want to cover a few other things here, but just really quickly, I want to touch on this first. Yeah, these things are more fact than not, right? So the recession, by definition, is 2 back-to-back quarters with a negative GDP. We've already had one. Okay. When it comes down to the quarter is the first 3 months, is 3 months of the year. First 3 months, the second, third, or the fourth is 4 quarters. That's what makes a whole year. And then you have the second quarter that goes from April until June, right? Now, April, May, and June. April's already finished. We are now April 30th. So when I say we have 2 months, until we are officially in recession, if we continue along the lines of what we've been continuing to see, we will officially, statistically, factually be in a recession. It's not an opinion. This is just, that's based on the actual rules of how a recession works, okay? How people classify a recession. Now, the second thing I want to touch on today, guys, is a video that I saw come out yesterday. Actually, a few people are talking about it already. Not necessarily the video, but the DTCC potential margin calls are coming in on May 2nd. I'll link that video below from Boss Blunts. Shout out to my guy, Boss Blunts. I tuned into a little bit to the end of the live I had yesterday. I should have been on there, but I was, getting my butt kicked by the sickness. So, we'll be on the next think tank. I think a few things are important to note, right? Yes, there could potentially be a lot of haircuts that are coming in to the market, meaning that there could be a lot of collateralized assets that are being margin called or that are just being cut, meaning that the same amount of collateral that you were able to use for these assets as of last week are no longer going to be acceptable as of Monday. I'm not sure exactly how long it's going to take for these haircuts to actually go into effect. That part is still unclear to me, to be honest. I'll take a little further look into that. Maybe I'll get back to you guys with another video tomorrow or later on this evening. But this does not, to me, mean short squeeze Monday, right? To me, does not mean game on Monday. I think this was already touched on in the video as well that he put out there. But just, a lot of people were kind of looking at this saying like, okay, game's over. It's Monday. We hit the moon. And I'm thinking to myself, don't set yourselves up for this, people. We've been through this a few times now. Don't set yourselves up for this, right? So I think that part's very important to keep note. Another thing too, guys, if you take a look at the overall market, I'm going to pull up the chart here, right? Now, this is the overall SPY. We did see the SPY drop a lot. And when I say a lot, we saw the SPY drop, 3.7% on Friday.
4.5 on the NASDAQ.
Right? 3.7%. From top to bottom, the SPY was at 425. The bottom. Let's just see here. It dropped 3.45% from top to bottom during the day. During the trading day. Forget the gap down that it had. During the trading day, right? Absolutely crazy. Now, to me, when you see this happening, this could already be people adjusting for the new rules and regulations that are going to be hitting the market as of Monday, if that is the case, right? So we have to make sure that we're looking at this from a full picture, right? We can't just, jump to the expectation that we're going to see what we want to see on Monday. That being said, we do have a few things coming up on Monday, right? We do have a few things coming up this week, I should say. The FOMC meeting. We're already aware of this. We already know that there's going to be a rate hike conversation. We already know that Fed Powell's going to be speaking. Personally, I'm expecting us to have a little bit of a bullish run next week. Personally, I'm expecting us to have a little bit of of pricing back into certainty in the market after next week. I'm not sure exactly when. I'm not sure exactly what the Fed's going to say, and that's always the biggest variable. What the Fed's going to say is always huge, right? Because if they say something that's crazy, we don't get the results we're looking for. And that is not great whatsoever. So take a look at AMC. What I did like to see from AMC on Friday was, although the SPY was dropping like crazy, as you guys saw, it came back down, 3.4% throughout the day. 3.7% throughout the day, 3.4% throughout the trading day, but 3.7% as the result of the actual day. AMC was only down 2%. Now, to me, that was pretty strong for AMC to not just completely crumble, right? Still not happy with the overall movement from AMC over the last month, 2 months, 6 months. Like, the general progression has not been great, especially after that run up to 34 plus. That was, a great euphoric run. The slow pullback has been killer, right? Has not been what people have been looking for. So a small victory, not falling with the rest of the market on Friday, but not good enough. Now, when it comes to max pain, guys, technically AMC's max pain right now is going to be 17.5 for the week of May 6th. So that's going to be this week coming up, which means we basically have a 15%. Let me just double check this. 14.5. Okay, 14.5% upside, right? With market makers basically blowing the winds at our sails. So that is a benefit to this bounce that we actually are priced in to potentially have a good run here for this week. Now, if it is a bullish week, if we do get the certainty price back into the market, if things do turn out okay from the Fed meeting and conversation from Fed Powell, after, of course, it goes through the crazy up and downs that it typically does, we could end up having a pretty good end of the week next week for AMC, ticker symbol AMC, but we'll have to see. Okay, so a quick few things, guys. One, AMC is actually doing something about the AMC token. Two, DTCC haircuts, margin calls incoming. The potential for that to happen, yeah, the potential is definitely there, but do not expect that to be the end all be all. And check out the video that I have linked in the description below if you want to.
So I wanted to see this here. Good old Ortex guy. Closing bell. Okay. So yesterday. Okay. Short interest percent. What did they say? Almost to 19. Almost to 19. Likely to reach 19. Pretty much 19. Approaching 19. Getting close to 19. Approaching 19. So the short interest is down, actually. Okay. So this one, this is Friday. This is Thursday. And the funny thing is, because they do changes from 7 a.m., it actually appears to be up. Let's see, Wednesday. $97.08, 97.6, 97.72. Tuesday, 99.21, 99.21, 97.08. So we had a large amount of change between Tuesday and Wednesday, right? Let's come over here. I have no idea why I was looking at this. Polygon. What, 30 minutes? What was that? Let's see, Friday represents Wednesday. So Friday, Thursday, Wednesday, Tuesday, Monday. Tuesday, Wednesday. Between, what was it? Between Wednesday and Thursday, or between Tuesday and Wednesday? It's Thursday. Saw that larger number of returned shares. Thinking, let's see, we go to an hour. It's a little easier to see, maybe. See this. Keep it on drawing. Here. 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 Probably here, etc. Those large moves in the pre-market, post-market, mostly pre-market. I would guess corresponds to some of these changes here. But the reality is it's not really changing that much. Which again, to me, to my mind, shows you how useless this ortex data is. Let's look at the other side of it here. So I noticed they have this value ortex estimated short interest on here now, which, okay. So, and also, I never understood this. I can't really figure it out, but ortex estimated short interest, here it says 18.96. On here it says 18.88. Okay. Here it says 18.93. Here it says 18.89. So according to this part of it, the short interest percentage went down by 1/100 of a percentage point. But according to this one, 18.93, 18.96, it went up. So which one is it? Did it go up or down? Well, it doesn't matter, really. But that's just like vortex stupidity. Okay, percentage of free float on loan, 25.27, 25.24. So that went down as well. The percentage on loan went down, according to this page. Right? From this day to this day, went down by 0.03 of a percent. Okay, cool. When we look at this page, well, we don't have the borrowed data on here, but we have the borrowed change. We're seeing, you know, pretty substantial positive change in borrowing here, and not quite as positive, not quite as much, but positive here. Don't know. Throughout all of this, the utilization is 100%, even though the percentage of free flow that's on loan is changing. So obviously the, you know, these large holders of shares are bringing they're messing with the number of shares that are available to loan. They're allowing some to be loaned, and then they're bringing them back, and then they're not allowing them. So I don't think that this is really useful at all. It's pretty much become irrelevant at this point. Antoinette's asking, will AMC ever squeeze or just go up in price naturally? I don't think it'll squeeze. I don't think it'll squeeze. Because, well, we can look at this right here. Let's look at the newer one, even though it's the same. This exchange reported short interest history. So this is going all the way back to, I wish we could see it back further. But we see this short percentage of free float go up and down right here. I mean, it's staying right around between 18 and 20, 21. But we need to see back further. Let me find it. Not hard to find because he posts it 3 times a day. Ridiculous. If I go back a couple months, it should. Couple more pages. Gives about 6 months of history. Let's see what we can see on this one. Okay, in this one we get down to 17. Not far enough. Covering is not closing. Know the difference. By the way, that's not true. It's the same damn thing. Let's see. Oh, perfect. He's got the full size, full desktop one here. Hopefully that's visible. Oops. Okay. So this is going back to November, and it was 16.26% then. Okay, so going back to 2020, it was like 5, 6, 7% percentage of free float. Keep in mind that the float has increased a lot since then as well, but January 2021, 8%, February 10%. Okay. March 14, this is when it starts picking up into double digits. March, April, May. Okay, and then here, so the problem with this is this is only reported twice a month. But you can see, let's see, where is it? It would have been between this May 28th and June 15th reporting dates here that you saw the June run up here. And so there's a difference of about 3%. And it continued down, and it's back up again. We haven't really seen these jumps in percentages like 2, 3, 4% at a time lately. Also, look at the days to cover. Throughout that period, it was it was very low because of the increased volume that was happening in the stock. So, but you can see here, 102 million shares down to 85, down to 75. So, 15, 10, jumping around by 10, 15. Let's see what it looks like now again. I'm just comparing the exchange reported short interest data. And now we're seeing it change by 3, 4 million at a time, 2, 3, 4 million at a time, each time. Days to cover is higher, but that's because you have no volume happening. So, but the big thing, and that really hits on the big thing, is the only thing that would really trap short sellers is an extreme increase in price, i.e., tons of buying pressure. Which happened before. Certainly did. And you can even see it when there is a spike in the price. You see it correlate to spikes in volume. So that's really what would be needed. to do anything like that. Now, come on. I can't get... Okay. So, like these areas, seeing these spikes in volume, correlating to that. Mini spike in volume, mini spike in price. Same thing here. The problem is, I think one of the big problems is, and I railed against this last year, was particularly guys like Roensch Capital, Trey Collins, you know, Matt Kohrs at the time, but a lot of it was Roensch Capital and other people like him pushing the option chain. And oh yeah, I gotta find that article. I think it was on Bloomberg, but it was an article about option trading by retail investors. It just came out. Here it is. Now, is it going to let me? And I was saying this. Oh, is it actually going to let me? No. Damn it. Mom and pop investors took $1 billion bath trading options during the pandemic. So we were wondering how much money was lost by retail investors, particularly on AMC, GME, but in general in the option market. Let's see what they say here. Economists at the London Business School found that mom and pop day traders managed to lose more than $1 billion during the bull market of 2021. The bill climbs to $5 billion when the cost of doing business with market makers is factored in. So you add in the spread and you get $5 billion. The study, Retail Trading in Options and the Rise of the Big Three Wholesalers, shines considerable light on the fate of individual investors who became obsessed with side bets in the stock market in the era of zero commission trading. Spurred by Reddit posts and urged on by Twitter and TikTok influencers and YouTube, daily volume in bullish contracts set record after record as stuck-at-home tinkerers flocked to the contracts in an effort to juice up returns. So here's the weekly number of call options bought to open for 10 contracts or fewer. Here's the chart. So in the 2010s, we're looking at 2 million, roughly under 5 million. Number of weekly number of call options bought to open. In 2020, we see this explode. By the time you're in deep into 2021, you're looking at over 20 million contracts per day, per week. Okay, so that I have no doubt that killed a lot of the momentum. Because the reality is that buying $145 strike call options does nothing for the stock. I said that last year. I've been saying it this year. Now people understand it. But yeah, a lot of people wasted their money on those call options that were essentially worthless to begin with, even though they had a nominal value. A lot of people spent a lot of money for them. They never went anywhere. So that's an interesting one. So interesting there, but that's responsible for a lot of the flight, I believe, of the AMC story. So this is an interesting post by the Ortex guy here. We know what this is and why it has to be. Hedgie lost. Their surrender flag isn't white, but rather blood red. So dramatic. Jay Drukas, whoever he is, so dramatic. The problem here, of course, is that hedge funds, what do hedge funds, it's like everybody thinks that, oh, the hedge funds are X, the hedge funds are Y, the hedge funds this, the hedge funds that. The hedge funds lose money when AMC goes up. The hedge funds lose money when the market goes down. And that's like, dude, what do you think a hedge fund is? What do you think hedge funds do? You look at this heat map here and it's all red, and you assume that hedge funds are losing? All hedge funds are losing? I mean, and you're so lazy that you can't even use a plural noun. Hedgie lost. Hedgie, singular. Who are you talking about? What are you talking about? This is ridiculous. No. I guarantee you that many of these hedge funds are long short or just short. Boy, that's where you want to be right now when shit hits the fan. So what I say is go home Ortex guy. Go home Ortex guy. You're drunk. Unfortunately. Here you go. My idea of what will be the catalyst. The second, and I mean the literal second, the mainstream media announces a recession, you will see a market collapse like never before. Right now, you're seeing the top 1% in Congress selling because they know what is to come. The reason they aren't reporting a recession yet is because they don't want it to totally collapse. Once that happens, they know they lose their liquidity. Yes, hedge funds are mostly in control, but when the big banks start losing, they will collect what is their apostrophe S. That is when this all falls together. We are close. So, yeah, we'll get into this definition of recession, moon soon, blah, 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 blah. Here's one. OBV when Netflix sells off versus when AMC sells, quote unquote, sells off. I like to talk about the OBV. Here's Netflix. Sell off. Here's AMC. Where's AMC? AMC. Sell off, quote unquote, sell off. Oh, the OBV is still high. Look at these percentages. With all due respect, 700 to 185 with all these gap downs, you're seeing the OBV do what you would expect it to do. On AMC, oops, you're seeing the same thing. Rise in price, rise in OBV, rise in price, rise in OBV, decline in price, decline in OBV. It's the relative motion of this indicator that matters. Not the number over here, not the amount. Is it moving in divergence or convergence? That's all you care about there, really. But they love to hype that one. Love to hype that one. Now, haven't looked much at Reddit recently, so I do want to check it out. Changes to DTC collateral haircuts effective Monday. Uh-oh, Moass confirmed. rainy day AMC fund. Ironically, it's all a bunch of change, quarters, single dollars. You should have covered at $5. See, that makes no sense. Should have covered at $5. The price hasn't been $5 recently. And they certainly, yeah. AMC did well today. Oh, I got to go back to that one. AMC did well today. Closed red, but you got to understand this. Lads, we only closed down 2.17% in one of the worst Friday bloodbaths I've seen, and possibly the worst market conditions since COVID started 2 years ago. NASDAQ closed down, blah, blah, blah. SPX, SPY. On any normal bloodbath day, a stock like AMC would have probably closed over 10%, with hedge funds and market makers shorting the stock even more. Market makers don't short the stock. Number is not plucked out of my ass, as I noticed AMC usually has a 2.5x to 3x correlation of the downfall of major indices. This is a good sign that the majority of retail left are holding, meaning minimal stop losses are triggered. Any pump and dump shorted stocks would see a major sell-off under such market conditions. Remember, this is a highly shorted stock in which market maker analysts still wants it to be in the single digits. Why would the market maker want it to be there? We just need this to break over 16 for a reversal. It's also hilarious to see the algos reluctant to bring this down even further, as huge amounts of puts will run in the money this week. Oh, okay. AMC belongs to the same basket as other highly shorted stocks. They run, we run. With us, a bigger upside, definitely alongside another stonk I shall not mention. VIX is approaching its all-time high. Closed at 33.4 with all-time high at 36.45, so people are uneasy for sure. What? No. Definitely not. What are you talking about? All-time high 36. In 2020 it hit 85. Yeah, no. That's completely misguided. Got 3 upvotes. Okay. Moass trigger. Okay, so I had an epiphany yesterday, and I think this is worth looking into. Did Elon just set up the catalyst for Moass? He just purchased all the real shares of Twitter for $44 billion, but you can bet your sweet ass there are a shit ton of synthetic shares of it as well as just about any other company. Please, oh my God, can we stop with this synthetic share, brain dead narrative? I guarantee you that some of the cash that you're holding in your wallet is synthetic money. It's not real. Oh, you're going to go spend it. You're going to go spend it. You're going to get paid in dollars, but some of those dollars are fake. It's ridiculous. Mickey Mouse nonsense. This should force the hand of the SEC. So when the deal is finished, finalized, and all shares must be bought, who pays for all the synthetic shares? Well, won't that be interesting to find out? Elon just fucked himself. He doesn't realize that there's 45 quadrillion synthetic shares of Twitter that he has to buy back. Go fuck yourself. Come on. Go read a book. What is the breaking point? what really needs to happen and actually could happen to initiate Moass. Clearly, the SEC is not going to be it. What are we waiting for? Not trying to cause doubt, just sincerely curious. Oh, let's see what happens here. No idea. There needs to be action of some sort. It's already here. DTCC sent out Friday a notice effectively just downgraded every bond. Banks just got a huge collateral haircut. Oh boy. So next week, Moass next week, free beer next week, right? Sanctions or GME split. Okay. Sanctions are due June 3rd. If that doesn't cause it, then GME split will. The day they are required to buy back all shares is when we moon 100% for sure. They will never be required to buy back all the shares at one time. Never. Will never happen. Never, never. Not without organic price action, pushing the price up, making it impossible for them to do so. But there's not going to be a regulatory catalyst that will do that. There just won't. Ape world problems. I was just wondering what helps a company more, buying the stock or purchasing its product or services. If I only had $100 to spend, where would spending it maximize the value to the company? Buying goods and services are for mutual benefit. They get the sale, you get the product you enjoy. Buying stock is for mutual benefit. The sale makes the stock price rise and provides you with an appreciating asset and possible dividends. Well, that's assuming that the price is appreciating, the asset is appreciating. Just buy stock. Your $100 does nothing to the situation other than personally get a few tickets for the ride. Well, I hate to say it, but $100 does nothing to the stock price either. Really doesn't. But just let him keep thinking that. Okay. All right, Chris is here. Chris says, hi Chris, Cam CS Trades being ostracized for using WebEx server, phishing, scam, hack. Collabees seem to be showing unity after initially eating each other live on the back and forth. Froggy Styles broke the news with its CS Trades Wolfpack Evidence #1 stream. I watched that actually. Was it last weekend, last Sunday? I think it was Sunday, Monday. I actually watched that, not all of it, but most of it. And I was going to do a video about it and da-da-da-da, but then, then the work week started and it didn't happen. But I did see that, and I was going to address that today because what's interesting is I did this. I looked for him, CS Trades Wolfpack, and here he is. And what's interesting here is that he's removed all of his videos except for 3. Remember, he had all kinds of videos, unless I'm missing something here. Now this has a bunch of stuff in it. Members only. Members only. Was it always like that? I don't know. Maybe it was always like that. But yeah, Froggy's Cameron, basically stole. I'm pretty sure that he did remove content because he completely lifted the interview that they did with Boss Blunts. He reposted it on his channel and didn't even mention Froggy Styles, even though it was on his channel originally. And Cam basically invited himself onto the stream. So yeah, there's some drama going on there, and I was going to kind of talk about that in terms of this splintering or breaking apart, for lack of a better term, of this narrative, right? So thanks for mentioning that. I probably would have forgotten about it, but I don't know. What do you think? Were their criticisms correct? I don't know anything about this WebEx thing. I didn't look into it, but I mean, it looked like they had an actual source that showed that there was a vulnerability. But I mean, those are the kind of things that, like, okay, they patch it, the companies usually fix it. So was he directing him to get a was he trying to get them to download an old version, and or what? I mean, I don't know. We'll look into that here shortly. What do you think of Jeff Forbes' latest videos? Are the shorts looking for an exit? Let's go look. Jeff Forbes is interesting because last year he was not quite as biased. He was actually one of the less biased YouTubers. But then he sort of went all in on AMC, it seems like. Shorts will be looking for an exit. All right, let's check it out.
What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, quick video. I made one yesterday talking about my thesis behind the stock market when it comes to looking at the fundamentals behind it, some of the catalysts we have, and just where the liquidity lies. And so today I was continuing to do more reading, and I was taking a look at AMC and how it relates to the entire market. I'm going to break down for you a little bit of my thesis on what potentially could happen. And the reason why I'm saying this could happen is because the bears and the shorts are always looking for bottom. And in the entire market, I don't want to say quite yet we've seen bottom. Over the next month and a half, I think there are too many upcoming catalysts that and events happening, okay, such as the CPI and obviously, you know, the FOMC meetings, that investors are going to be hands off and the bears are going to capitalize on it. However, if there is any sign of change, okay, not only is the market going to rebound, but some of these stocks that are heavily shorted are going to see some massive bounces. And I looked at the SPY chart. I was taking a look at the 3-month chart, and I'm going to go into it for you. And you can see right here that the stock price peaked at the end of March very quickly. Obviously, it was a little bit of a cool off because it was a massive run in just 2 weeks, all right, from the 14th. And then, you know, Powell made some of his statements and continued to just crash the market even more. And bears really jumped on the thesis of we're going to, you know, go to 75 basis point hikes. But that's for another conversation. We've already talked about that. And then you looked at the AMC chart and you think, well, when did we spike last to $34? All right. And obviously it shows 29, so that was a close. And it was the 28th, 29th, the end of March. And you saw this massive run up from the same exact day of the 14th. However, when the entire market popped 8 to 10%, tech maybe a little bit higher, AMC went from 13 all the way to 30 plus. It was a gain of about 200%. All right. And you can look at a couple other stocks that are heavily shorted as well. And stocks that not are just heavily shorted, but actually have volume behind them. If you're looking at some of these insanely low float, you know, or penny stocks that have no value behind them, obviously it's not going to be able to bring it up. But if you look at just natural stocks that are heavily traded, such as AMC, that is short, it was massive rewards. And we've been floating around this 4,200 or on the SPX, or let's say 420 on SPY, 418 to 420 on SPY for quite some time. And obviously you can clearly see as of Friday, we broke below that. Okay. However, when the market tends to bounce and we go through this cycling pattern, which nobody's going to expect, it's just going to completely turn. That's how it always happens. You can expect these stocks that are heavily shorted, that the bears and the shorts are going to think to themselves that they're at a position, okay, where it is going to be really beneficial for them to exit. And I want to digress just one step further. So the individuals and the institutions that have shorted and the funds that have shorted AMC use the narrative of the company financials, of the fact that the public doesn't want to go to movies anymore. And all of the narratives, okay, we'll never see a positive EBITDA again, okay, and all of those narratives were crushed at the end of 2021. And I swear, like, their motive and their narrative then...
They were? I don't think they were. No, they're still heavily in debt, right? I don't agree with that.
Shifted and pivoted to, okay, well, you know, the Fed has just printed off an entire amount of money. The market needs to pull back. The market's going to crash. Now we're going to ride this one. All right. And if we know that the market is going to pull back, it's going to pull AMC with it. And they've switched to that because AMC's business model has continuing to change and continuing to really give a brighter outlook in future, as every single earnings call, you know, the entire executive team has laid out. So their narrative has slowly started to change. And when you look at the market now, they're hanging on for another market crash, another market pullback. That's where things are going to change. So I would expect to see a massive bounce for any stock that is heavily shorted, that has volume behind it, which obviously AMC and GameStop are involved with.
Well, the second time you said it about volume behind it, what are you talking about? Volume behind it? Don't really think so. Volume is kind of, I didn't even look at the volume recently, but I mean, here, what, shoot, 21 million, 20s, it's in the 20s, 30s, 40s, not really volume behind it.
Okay, if the market does in turn bounce, which inevitably it will. Another thing I will want to just touch quickly based on, because I was reading a little bit further on this, is that we've already seen the first negative quarter of GDP, okay? And a lot of times recessions only last between 8 and 10 months. And a lot of times, by the time the natural public knows that we are in a recession, it's already been going on for anywhere from 4 to 6 months. The reason being is, in order to actually prove that we are in a recession, we need 2 negative growth quarters. Okay, we could be already in the start of a recession as of a couple months ago. And like I said, the market is adjusting, and the market is always forward looking. So the market is already pricing in what is going to happen over the next few months. Okay, and they're going to continue to price months ahead because it's always forward thinking. Now, yes, obviously you have intraday swings based on news catalysts, or if, you know, a heavy Fed member decides to, you know, sway someone's opinion one way. But like I said, the market is always forward thinking. And by the time we know that a recession is already hit, the bounce is already going to happen. So just keep that in mind going forward. I'm going to continue to talk about natural market health and, you know, if what happens if we are in a recession. And also, you'd be surprised that half the time that we are in recession, stocks actually outperform, okay, and actually give positive growth going forward. And we'll talk about that in other videos. But in this video, I really wanted to focus on AMC because the narrative has changed. All right, maybe some you know, these funds and institutions are still betting on AMC as a failing company, but that narrative has changed. So guys, that's it for this video. Enjoy your weekend. See you in the next one.
Okay. I mean, it could just be that, you know, not necessarily a failing company, but the stock is overpriced. Could very well just be that. Well, let's watch another one.
What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, the biggest earnings week of the season is officially over. All of your mega cap companies have reported. Markets insanely volatile. In this video, I want to go over a few things, what to look for when it comes to getting into the month of May. Generally, April is very generous to the stock market. Wasn't so much for us this month, but we're getting to another critical level while a lot of things behind the scenes are changing. So in this video, I want to give you a good overview of what is happening, not only on the forefront, what we're seeing on the actual price action, but what is actually moving the markets, and it might surprise you. So let's get right into it. First off, as you can see, 2 companies yesterday really pulling down the entire market. Amazon came out and it led their worst month since 2008. It was one of their first quarters, I think, in 20 years. They have not actually grown. A big issue with Amazon earnings was the acquisition of Rivian EV maker, really pulling them down. I think it was a $7.6 billion loss, but they are also facing supply chain issues and did mention a little bit of weak revenue and guidance going forward. However, consumer spending hasn't really started to slow down, but I believe they're starting to see the peak of it hit, and we're just getting to that downturn. So their guidance going forward was not good. Now, in the contrary, Apple had reported monster earnings. I mean, this was a great report across the entire board, and the market reflected that after hours. And you can go through a couple things here, and I'm going to highlight one difference at the end. They announced a 5% increase in their quarterly dividend, a $90 billion buyback. New
Great.
stock buyback program, which is going to be happening despite of all the
Because
issues.
that's what, companies that are extremely strong do, is buy $90 billion of their own stock. Anyway.
That were going on in China. And they also had issues last quarter. They reported saying iPhone sales were starting to slow down. I mean, there's only so many times you can come out with a new version that basically has an extra camera or an extra feature to where it's just not really enticing for, individuals to keep on buying. But they stated this on the call, and this was the big hit. All right, the company expects a $4 billion to $8 billion impact on June quarter revenue from supply constraints. They're still feeling the effect of that, as well as some COVID-related shutdowns going forward, because they always like to look forward. All right, but so the entire market pulled back. I was slightly optimistic in the short term, and you can see here we did have a little bit of bullish divergence. Divergence occurs when the stock prices making a lower low, but the RSI is making a higher high. As you can see, this is a down right here, but the RSI is going up. That is a bullish divergence, and the market reacted well, bouncing off that 413, 414 area all the way up to 430 until the earnings report happening. We are sitting at another very crucial level. Let me zoom out for you. All right, I'll even jump over to the daily chart here. This area of the SPY between that 410 to 420 has been soaked up consistently for this entire year. And it's going to come to a point where eventually, if there's not going to get enough bullish momentum moving forward, the bears are going to take over, and then we're really going to see some good downside. If you look at the weekly chart, it definitely gives you a much clearer picture. And you can see right around here, this 417, 418 on the close of the weekly, which we're floating at right now. There's still a few hours left to this Friday playing out like a typical one over the past like 10 weeks, just a slow fade into the close. But they're really trying to fight for that. Once we break through that, things are going to get a little bit uglier down to that 400 psychological level. And then you got some support in the 390 to 385 areas. But here's where things are getting very, very
very, very, very what? Very, very scary, very concerning. Okay. Well, in the meantime, let's just look at it. Oh, okay. Come on. Okay. Oh my God. All right. Not bond. Okay, finally. Okay. Okay. Get volume off. Here's the COVID crash. Right here. And before that, you were at this level. 326. The peak was up here at 480. We're not even halfway. We haven't even retraced 50% of the recovery to the pre-COVID lows, to the December high. So, is there more downside? Probably. See what Jeff says now that it's back. Oh, he's in 60 frames per second. That's why. All right.
Getting very, very skeptical when it comes to the short side. How much can these bears continue to keep pushing? So one thing I look at is,
well, it's not
what is being priced.
It's not bears continuing to push necessarily. I mean, this market is extremely overvalued, no question, right? Why? How? Well, it's because of the increased liquidity that was enacted by the Fed back in here, 2020, and continued in 2021. What effect does that have? It pumps up the equity and real estate markets. And what are we seeing now? Crashes in the equities and real estate markets. So it's not really that surprising. This is all fantasy. This is all fantasy right here. I get shit for saying this probably, but this is all fantasy, fake rally. This is not sustainable.
In right now when it comes to the Fed fund rate. We've talked about that numerous times. All right, that everything was slowly, steadily moving, spirals around 450 when Jerome Powell was speaking at the global economy, and he stated that they're going to look at the 50 basis point hike, all right, and maybe accelerating a little bit quicker, trying to get a big punch off the rip to get rates up there to try to combat inflation moving forward. But I think the markets are actually pricing this in a little bit too much, and any little bit of pullback we're going to see back testing some of those all-time highs. Now, until you show that trend has really changed, and this weekly chart pictures it beautifully, this is still just a bit of a pullback. The SPY has not really hit that full-blown bear market territory where we're panicking and you're seeing these gaps on the weekly charts like you did back when COVID hit. All right, you have to kind of stay with the trend. All right, and now we've changed. I've adjusted my long-term portfolios all the way since August of last year when they started doing this, and we continue to play the intraday. But for my long-term optimism, my 12-month optimism is still on the bullish side. And here's the reason why. So first off, they've completely factored in a 50 basis point hike for May. All right. And a couple of Fed presidents had stated that a 75 basis point hike, which Jerome Powell did not say, okay, but some other ones did, but a 75 basis point hike would just completely shatter and shake the economy, especially in the short term. However, if you look over here at the June 15th, we're sitting between 75 and 100. Look over here at June 15th, they have completely priced in a 75 basis point hike to price in a full percentage point hike in June. Okay, and if you go out to July, it's another 50. So we've got a 50 in May, a 75 fully in June, and another 50 in July. All right, but here's where things change. And I've talked about this. UBS has predicted, okay, and expects inflation to be at a peak. Now, I understand there's a little bit of, controversy saying, wait a minute, inflation should really be much higher than 8.5%. And trust me, I go to the grocery store, I see it. All right. However, you're slowly have seen, especially in the gas prices, we're not sharply rising anymore. We're getting to a point where we're starting to base, and that might just be for the short term. All right, that might be that like the producer price index hasn't caught up to it yet. But if UBS estimates are correct, we'll get the 50 basis point hike in May as expected. But June 15th is the next meeting, and before that, we have two CPIs that are going to be released. You have the April, which would be on May 11th, and the May, which would be on June 10th. And if UBS predicts this properly, we'll be sitting at 7.2%. It would be absolutely astonishing to see that inflation has pulled back, but the Fed is going to go ahead and say, listen, we just did a 50, double what we said of original 25. Okay, we just did a 50. Now let's hit on a 75. In my opinion, what is the need for it? You've already seen the tapering begin. We've seen two consecutive decreases, okay, from that high of 8.5%, that there's no need for it. Maybe getting another 50, all right, maybe doing those two 50s, all right, in May and June, no problem, then kind of slow it back. But going up to the 75, I think is just completely out of control. Like I said, all of that can change if these numbers come out at 9.5%, 10%, and so forth. All of this can change. But where the market and the outlook stands as of right now, they are overpricing this just a little bit too much. And a lot of the Fed outlook had stated that they're targeting anywhere between let's say 2.25 to 2.75 by year end. And if you go over here to July, we're already going to be at 2.25. If this stays, it just doesn't really make sense to me. I think the market is overreacting just a little bit. There are obviously a lot of other factors, but as of what we know right now, okay. And lastly, as you can see here, Powell seen slowing rate hikes after May and June front load. Okay, so like I said, that is the first thing. The next thing I want to talk about, price earning ratios. So things got completely out of control, all right, in 2020, especially early 2021. When you look at Neo and Skills and just a couple other stocks that were just nonstop runners that had insane price earning ratios. The average for the S&P 500, it goes between 13 and 15. We are still a little bit on the higher side. However,
of course,
the average
Shiny,
goes
always.
back, over 100 years.
Always.
And because we are now in this technological, era, and obviously all these high tech companies, okay, are evaluated off of future revenue. I can see that 13, 15, ratio changing to about 16 to 18, 16 to 19 on an average. Well, you can see here, all right, where we were sitting close to around, let's say around that 35, all right, to 40 price earnings ratio. We're all the way at 21. Some of these companies are really, really getting to good value. And I'm not talking about these high growth companies that are just at their all-time lows or trading at their 3 years lows. I'm talking about good, solid quality companies that price earning ratios have come down a little bit, that things are starting to stabilize just a bit. Okay, so just keep that in mind going forward. If you did, take any of, my opinion going forward, what I said last year of slowly dollar cost averaging, we're at another good time to continue to do that. I haven't really built up my long-term portfolio as of yet. I'm continuing, to play the intraday. It is working out very well, except for Wednesday. Had a horrible day on Wednesday. Told everybody exactly what I did wrong inside the group. But like I said, it's going to be interesting, and look for it to hang around this level. And over the next 2 months, we're going to get a good insight of what is expected to happen over the next 6 to 12 months. Now, when we talk about recession, okay, I have, just two thoughts, really quick thoughts on that. One, recessions don't really happen when the entire country is preparing for it. That's my first thought on that. Secondly, I do believe if we getting out of the hole that we dug ourselves into, and especially because of the way crude oil had spiked over 100%, and it's 19 for 19. Okay, now this is the 20th time that a recession has occurred after a spike of 100% or more in a 12-month period. Sure, getting out of this without a recession, no problem. However, I can see that, but we're talking 2020, 2023, 2024, late 2023, 2024, before we really start to see some of the effects, because like I said, we're still at that earlier stages. So guys, that is it for this video. I hope you enjoy your week.
He's more bullish than I am, for sure, in general. All right, let's get into some good ape videos here. All right. Man, finance news has been pumping out so many fucking videos. It's crazy. Moon market? Who in the hell is this with 6,000 views? Look, another old ass fucking Charles Payne video with Dave Portnoy. Realest AMC and GME video you'll ever see. Alright, Short Squeeze channel. Drama Queen.
Not a lot happening in terms of the stock price of AMC. As you can see, today we traded at about 15.30. That's where we're currently at before market close on Friday.
Ooh. And
par for the course. We all know about the stock price. We know it's not real. As you can see here,
we know it's not real. Oh boy, this is a good one already.
About a month ago, we had that huge run up north of $30 before the stock was halted, and they applied more of their treachery and illicit activity, of which they like to do. Citadel has been fined many times for trading during halts, which is ludicrous in and of itself. And as soon as they turned the stock back on...
So, bitch about the halt and then bitch about the fact that, like, what? Okay, but that there was no evidence that they did do that here. And the halt was legit. So, whatever.
Or turned to trading back on, it was at $25 when it was at $34 and rising. So
Well,
first of all,
what do you
how
know?
does a stock go that's halted because it's going up too fast?
Well, actually, no, sir. It was halted on the way down. It was halted on the motherfucking way down, not on the way up. This is basic. Just look at the damn chart.
All of a
Come
sudden
on.
wind up down once it's restarted. That doesn't make any sense, does it? Right? And on top of that, they halted GME at the same time. So how blatant is that? How obvious is that? We all know by now. We're pretty much numb and immune to it by now. The good news is I'm theorizing that it's just a last-ditch desperate attempt to get people to sell. Right? We see it go up to 35 and then it goes down to 25. We get discouraged. The price hovers at 16, 15, whatever, 14, 13 bucks. During the dog days of summer, people finally give up and start to sell. But that's not happening. Nobody's selling because we already know what it is. We know they employ psychologists to play with retail investors' minds. We know the fear and greed index. We know all of these things. And we know their algorithms manipulate the prices in order to get people to sell. And we also know that the market has been crashing. Okay, we know the Russia situation, the China situation, the world economic situation. We know the natural gas. We know the oil situation due to these worldwide events. And we also know that hedge funds have been getting probed left and right. DOJ investigations, federal investigations. We know the hammer's been coming down. And obviously Bill Hwang, I made a story yesterday regarding his situation, his arrest. And he put up $100 million for his freedom. He's pleading not guilty. Right? He was instructed to hand over his passport to prevent him from traveling. He said he lost it, so his wife agreed to provide hers instead, etc., etc., etc. 11 criminal charges, along with his CFO, Patrick Halligan. So we know that the hammer's coming down, and we know that they know this. They're on the inside, so they know these things before we know these things. They know early what's going to happen in terms of the market, in terms of all of these things. We know Congress people even know, so they trade ahead of stock movements. They traded ahead of the pandemic, March 2020.
Plandemic.
Right? And they made millions of dollars, namely Nancy Pelosi, but not only her, many Congress people, government agents, right? They move on the inside information that we're not privy to, right? So the interesting thing about this with the Bill Hwang situation is I just want to highlight this, and I will link these articles so you can see what's going on. Okay. So Lawrence Lustberg, Hwang's legal counsel, said his client had fully cooperated with the government's investigation and was entirely innocent of any wrongdoing. So key two words, fully cooperated. So a man of this stature, worth at one point north of $35 billion, when he swelled the firm's portfolio, Archegos, from 1.5 to 35 billion in a single year. He's one of the big boys, right? He's not a peanut salesman, right? So being one of the big boys, you know he knows what's going on
Or popcorn salesman, as it were.
on the inside, meaning he sits at the table along with the Ken Griffins and the Steve Cohens and all of these people. The Jerome Powells, the Gary Genslers, the Janet Yellens.
Guilty by association, huh?
So
Okay,
if
that's
he's
good.
fully cooperating, who knows what he's saying in order to stay out of trouble. Or I do know that he's a quote-unquote born-again Christian. So I do know Christians' beliefs. They believe in doing the right thing, so to speak. So he's compelled, due to his religious beliefs, to tell the whole truth, in his mind at least, of what is the whole truth. So he's not going to withhold any information. And from all of the stuff that he was privy to, being one of the members of the Grand Table, who knows what he's talking about, right? So who knows who's next in terms of the, the hammer dropping. And now we also see here, and this is a current article, April 29th, as you can see, Deutsche Bank headquarters, the headquarters, searched over possible money laundering. So as I said, the hammer is coming down and no one is immune. I will link this as well. An estimated 170 regulators
But I got
descended
my
on Deutsche
shots.
Bank's global headquarters. So this is not some branch, in Wyoming. We're talking about the global headquarters here. So this is huge, huge news. Okay, and this is not the first time they've been in trouble. And we all know what these huge banks are capable of. We know the illicit activity. They've been busted before. In 2018, the bank was fined $16 million for improper oversight. 2019, the bank was investigated for money laundering but wasn't charged. I mean, we all know. Come on. And let's take a quick look at this. Deutsche Bank whistleblower in Fed's Trump probe found dead after vanishing 1 year ago. This was an interesting article, so let's take a look at this. The body of a missing whistleblower, an alleged federal informant, was found Monday morning by police in Los Angeles. According to a bombshell 2019 profile by the New York Times, Valentin Brocksmith, 46, was the son of a high-ranking Deutsche Bank executive who killed himself in 2014, perhaps murder-suicided, right? Upon his death, Brocksmith gained access to scores of documents, including ones that gave insight into the German bank's relationship with Trump. So his dad had access. His dad was a high-ranking Deutsche Bank exec. Okay, he had all of these documents and inside information, classified stuff, and then all of a sudden he quote unquote committed suicide. So we all know what happened here. They suicided him. They walked into his house, shot him in the head, and then put the gun in his hand, like they always do. So he gave the classified documents to federal investigators and journalists who were investigating potential crimes. So his son gained access to these documents. Why do you think he did that? If his dad actually committed suicide, right, he would have left it alone. But the fact that his dad was murdered and he knew it, and again, these are all my opinions, right? But the fact that his dad was murdered and suicided, he decided to go public because he was probably scared. So the LAPD announced in a statement that Brocksmith was last seen on April 6, 2021, last year, and was later reported missing by his family. According to authorities, his body was found at a high school, and investigators don't suspect foul play led to his death. So let me get this straight. His dad was murder-suicided because he had all these classified documents. His son turned them over. He went missing a year ago, and then a year later, he's found in a school playground or what, a parking lot, right? A year later, and they said there was no foul play. So how was he dead? Why was he missing for a year? How ridiculous is this?
It sounds
but
ridiculous.
Again, par for the course. We all know how they do. We know they kill people for fun. You know, we all know about Hillary and her bodies, right? Hillary Clinton. We all know that murder is nothing to these people, right? It's just another day at the office. Literally, human life means.
This guy is such a ridiculous grifter. Oh my God! Listen to this shit.
Nothing to them.
How many people did Hillary Clinton kill? They do it for fun. This article is about Donald fucking Trump, you fucking grifter. It's about Donald fucking Trump. But you got to throw in your anti-woke nonsense.
Day, but I just found this interesting.
Jesus
and again,
Christ.
Deutsche Bank ties, classified documents, murder, suicided. His son gains access to the documents.
Murder, suicided. What? I don't think he knows what that means. He was murder-suicided. Makes no fucking sense. This guy is ignorant.
Goes missing a year ago,
God.
Is found dead, and they say no foul play. All of these people are in bed. Give me a break. Demons work with demons. So we all know, unless you've been living in a cave,
demons work with demons. Okay.
That Elon Musk, he bought Twitter, obviously. He sold 8.5 billion shares of Tesla, you know, because he needed some of
$8.5 billion worth of Tesla shares, not 8.5 billion shares.
Right, to put into the pot to buy Twitter. And we know that the far left is going nuts because...
Are they?
Whatever, let them say what.
Are they? Are they? Really? That's news to me, okay?
Why they're going nuts. I won't even speculate, right? But we also know that Biden's administration, meaning Obama, Biden has nothing to do with anything. He doesn't even know which foot is right and which foot is left. But Obama...
God, this is so fucking brain dead. Oh, my God.
And Hillary and Chuck Schumer and Pelosi, all these people behind the scenes who are pulling the strings of this old demented geezer, they basically are forming a disinformation board because they're so uncomfortable with somebody of Elon Musk's stature and stance bought Twitter. So all of the things that they've been doing, the shadow bans, suppressing stories. We all know about what they did with the Hunter Biden laptop situation right before the election, which would have influenced the election. They hid the story. They said it was Russian disinformation. You don't need me to tell you this. You already know this. But all of these things, Hunter Biden on crack, Hunter Biden messing with little girls, Joe Biden being involved with the illicit business activities that Hunter Biden had with Ukraine and China, and all of these other things and things we don't know about. And of course, Twitter, Facebook, all of these motherfuckers, they suppress these things because they're in the pocket of the far left and the Obamas of the world, right? So now they're scared because Musk can expose it, because now he
You're a fucking idiot if you think Obama is the far left. Go fuck yourself.
owns Twitter.
Oh my God.
So not only can he
The
change
far
the
left.
policies moving forward and the shadow bans and allow for free speech, which he said he's going to do. So they're
I'm
scared
fucking
about
recording
that.
this
But
video.
more
This is
importantly, they're
bullshit.
scared about all the
This is fucking retarded. Jesus Christ.
past shit that they've done that's going to be exposed now. So they made a disinformation board. They're doing Twitter, bold. Again, they're in the pocket of these corporations. So they definitely could do many other things to
Great. Straw man argument.
never know. And I said, we don't know how this thing is going to be. Ever since people have been shorting Tesla to the ground when it was a fledgling company struggling to get out of debt, he had issues with them for not the video for the algorithm over these evil hedge fund motherfuckers. So if you haven't already received it,
God, this guy is ridiculous.
if you own GameStop shares, you should have received the vote. Right here, I received mine, and tweets should share stock dividend 1 billion. I voted for Ryan.
Wait.
You hedge fund motherfuckers. So if you haven't already,
Shares available 62. You only have 62 shares? Wow.
16th, they're going to have their annual shareholder meeting. Now, Professor tweets, should shareholders approve or object further compensation increases to insiders who recently have sold 891 million of stock while shareholders have incurred many losses? So I commented, and I've been saying this all year. As you can see my comment, you don't need me to read, you can read, right? But these MFs have been dumping shares left and right. As you can see here, these are all of the insiders.
Oh my God.
These minus units change. Minus means sold. When you see no minus, these were just awards. So they get
Maybe
dropped
you shouldn't
shares
have
on the
pumped
left.
up the fucking stock. Or you should have sold when the stock was high. You're getting mad at people for selling their shares. Well, you did this. You did it.
For doing nothing.
Well, not him with his 62 shares of GameStop.
They do nothing. Remember, the stock was at $2 before we came in and resurrected this
See?
dirtbag of a company and made it into gold.
Ha!
56,658,000 shares.
So
Sean
mad.
Goodman. Award
What did
for
he
what?
do? He didn't get anything. He
And
didn't
had
do
just
anything.
sold 107,000 shares.
Oh my God.
On March
Oh my
3rd.
God.
The next day, he's awarded 56,000.
What?
Adam Aron, award. For what?
What did he do?
For what? How many of them are buying is the question. The last time this old geezer bought
God.
any shares was fucking 2017.
This guy's...
Fuck this guy.
No, fuck you for being a fucking moron. Seriously. What an idiot.
Award.
Oh my God.
Award.
Wow.
What are you awarded for? For us saving your old ass? Your old wrinkly ass?
Didn't go ad hominem, right?
Dumped. All these MFs did was dump shares, as you and I were freaking scrounging nickels to buy one more share. Dumped. 500,000 shares dumped February 22nd. Dumped. Award 1 million shares. How hard is it for you to buy 5 shares? This guy got awarded 1 million shares. Fuck this guy. Dumped. January 12th, 312,500. But
my
he said he was
God.
going to do it as part of his retirement. He told us, who cares? He still dumped it. Bottom line. 312,000 dumped, 482,000 dumped, awarded 1 million. While we're struggling to keep this thing afloat and try to trigger this thing, these motherfuckers are dumping shit.
Well,
And
maybe
you're
you should
talking
take that
about
as a
they're on the other
sign.
side. You're a fucking idiot. Fuck you.
Wow, what an angry, angry idiot. Jesus Christ. Ladies and gentlemen, this is what happens when you don't refrain from alcohol and or drugs when you're pregnant. This is what happens right here. More old ass videos. Oh, look, stimulating trades, old short videos. I haven't seen these. Captain's log. Hey guys. Hey guys.
Hey guys, all content discussed in this channel is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. Stocks fell off hard today. Yesterday I remember saying that the bounce up we saw made absolutely no sense, and today that truth was reflected in how the stock market in general slipped. With the closing we had today, this marks the worst month for the stock market ever since 2020. Investors are all ditching tech stocks which have been the market's darling companies for over a decade. This is the consequence of worries mounting up about the Fed's decision to raise rates to combat soaring inflation. The FANG stocks, which consisted of Facebook parent Meta, Apple, Amazon,
My computer's like, no, you don't need to listen to this nonsense.
the FANG stocks, which consisted
go.
of Facebook parent Meta, Apple, Amazon, Netflix and Google parent Alphabet, collectively lost more than $1 trillion in market value this month alone.
Oh,
The S&P
Poor
500 lost
guys.
almost 4%, NASDAQ lost almost 5% and the Dow Jones lost almost 3%. It's an absolute disaster all around. GameStop and
Just
AMC did
wait.
not make any new announcements today. Quickly, today I issued a total of 4 alerts, with one running over 10% and another running a massive 50% after the
penny
alert
stock
went out.
alerts.
I know many of you want to day trade and get alerted to the best runners, so I encourage you to join my Discord so you can have access to it. Links are in the video description and comments. Let's now talk about today. The Fed submitted over $1.906 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 52%
Oh my
of the total
God.
volume today, while dark pool trades for GameStop accounted 49% of the total volume today.
Well, so much for that DRS having any fucking effect at all on dark pool. Right?
AMC had a bearish day, losing over 2%. It opened to a small run from 15.55 to 16. After this run, AMC began dipping pretty much for the rest of the day, eventually closing at 15.30, below the VWAP. On Sunday, we will talk about what I think will happen next week. GameStop had a bearish day, losing over 3% for the day. GameStop opened to a run from 127 to 130.50. After this run, GameStop began selling off, eventually finding support at 123 before a bounce up to close at 125.07, below the VWAP. Like I said, on Sunday, we will talk about what I think will happen next week. I highly encourage you guys to come over the Discord, as we just reached past 6,000 members. You will find tons of active traders talking about GameStop and AMC and other meme stocks and crypto in the markets. It is a very engaging atmosphere, and even more so if you are looking for a serious day trading group. Links will be down in the video description. Thank you again for being a part of this channel. I will continue striving for better content.
Okay. All right. Jack Hunter.
Hey guys, it's Jackson Hunter. I'm back with another AMC stock
Back
update.
with less hair.
Today is Friday, April 29th. Please hit the like button. Please smash that subscribe button. I love and appreciate you. Oh, so AMC stock was down on the day 2.17% in the regular
When's
trade.
the next yoga session? That's what I want. When's the next
Hours,
yoga?
ending the day at $15.30 per share on a volume of 21 million. That's got to be the lowest in at least 6, maybe 9 months. Remember, I'm not a financial advisor. This is not financial advice. Please do not make investments based on what I say in my content. But AMC was only down 2%. SPY was down over 3%. I'll show you that in a second. AMC is making this similar pattern every single day where there's a spike in the morning and then it just drops off. So let's take a look at the limit sells and limit buys. Big limit buy at $15 and still in after hours is there. And then big limit sell at $15.80 that helped push the price down a little bit. And that's in after hours as well. So you got this support at 15 and resistance at 15.80 as of right now. Check out SPY, dropped 3.69% just today. So if I look at it on a more long-term scale, it looks like it's broke through that head of the inverse head and shoulders, which is at 417. So there's probably going to be a lot more downside to come for the overall market. But we've known that for over a year now. Check this out right here. AMC just dropped a 14A, a proxy statement, and they've notified stockholders of the annual meeting to be held on June 16th. And you can vote on electing the board of directors, ratifying the appointment of Ernst & Young LLP as their independent registered public accounting firm for 2022, and to conduct a non-binding advisory vote to approve the compensation of named executive officers. You guys can check this out. It's on the AMC Investor Relations website, and these are the board vote recommendations. Annual meeting will be held in person in Kansas. Record date is April 22nd. That means if you were holding shares on April 22nd, you can have a say in these matters. So I'm not going to bore you guys with 92 pages, and I already looked for any talk about a dividend. There's really no talk about it, but there are a bunch of numbers. Check this out right here.
All he needs is a mustache. Does he have a mustache?
It's going to be May
I can't
9th,
tell.
okay? May 9th at 2 p.m. West
It's like
Coast,
he's growing
5
a
p.m. East
mustache.
Coast. Check this out. Thank you to Jay Drukas. $1.907 trillion in the reverse repo today.
Why don't you explain what this means and why it's relevant? I love it. You know, this is more Ortex guy nonsense.
I think that's the highest I've ever seen it. It's going to crack 2 trillion. It's just got to eventually. Then check this out right here. CEO Adam Aron tweeted out, I just was with filmmakers at the annual CinemaCon in Las Vegas. So we got big films over the next 3 months. Doctor Strange, Downton Abbey, Top Gun, Maverick, Jurassic World Dominion, Lightyear, Elvis, Minions, Nope, Bullet Train, and more. Those are going to pull in a lot of money. Love you guys so much. Have a beautiful, beautiful weekend. Peace.
Beautiful. Who's worse? Who's got the more of the shall we call it questionable appearance? Jack Hunter or Trey Collins? Because they're both looking pretty, you know, like John Turturro in the Big Lebowski. Tony Denaro, what's up, Scotty? Just checking up on your stream. There will be more info coming out on the CS trades now that the content creators are actually talking and working together. Stay tuned. Yeah, what a weird thing. What a weird thing. I never really cared for Cameron. Thought he was, well, quite frankly, kind of an idiot. And I hadn't seen anything about him in probably months. So, but I did catch the stream that Froggy Styles and Mediocre Trader did last weekend or whatever. Interesting. Looking forward to that new information coming out then.
In the Bay Area there for about 162 Southwest 1212 Vegas departures, turn left heading 060.
Phoenix, underground 121.7.
Speedbird 7 climb maintain flight level 410. Skywest 1325 Roger Denver departures climb maintain. Dude, American 3 fucking descend. What are you doing? You're like all over my shit. What the fuck's going on here?
What's up, everybody? It's the Common Sense
That
Investor.
sounded like flight simulator, Microsoft Flight Simulator audio, possibly.
Swords. Coming at you live with another video, and sorry about the delay. I know a lot of people expect videos every day, but I've told y'all, I don't come on unless I have something to say, and I got something to say today. I have been in such a deep dive on these new rules because I could not understand how.
I watched his stream a couple times last year, and I talked to him in his chat, and yeah, I didn't get such a great feeling from him, to be honest. I thought he was kind of condescending, and yeah, I don't know. It was just I didn't really care for his demeanor and whatnot, so I never bothered with him again. I guess the next time I saw him was on that one interview with Boss Blunts and Froggy Styles, which I had no idea that he weaseled his way into that one, but yeah, no, I've never really been too much into him.
I'm reading one interpretation, and YouTubers have another interpretation, and I'm going, something's not right. I mean, and I couldn't figure it out. Anyway, I've dug into this thing. Me and Brenda have went word for fucking word between NSCC 2021-010 and 2022-003, and looked for what words were different. I mean, what changed? There's a 7-page difference, and we went in and we found out what has changed from the old law that they threw out, and now they've introduced this new law. So I'm going to have an update coming for y'all. We show you what has been changed. All right. But for now, what I want you to focus on is what you see right here. It's a United States map, and this is a air traffic controller viewpoint of every plane that's in the air. This was on 9/11. And taking a break from my studies, I was watching this, and I just can't get away from it. Every time I see something, I see a revelation. Look at this map. Look at all the planes in the air. And I want you to think about FTDs. Okay? And then I want you to watch
what?
As the video progresses. Think of the airplanes as FTDs. And here we go. Look at all them FTDs being switched from place to place, from brokers to brokers, hiding them in bundles and packages and shipping them to the next place. Now think of the SEC and what they have created, and they are trying to land all of these planes safely so that none of them crash. Yeah, just like the stock market. If you look at this and you think that every airplane is a stock in the stock market, and the SEC is trying to land all of these squeeze plays without crashing any of these fucking planes, you begin to see in your mind what they're up against. Hundreds, thousands of stocks on the stock market. So many of them manipulated to the point. I mean, come on, people. Y'all know. Y'all been in this play for a fucking year. You know what it's like. You know how many stocks they've done this to. And they are trying to land every stock squeeze play, just like every plane that you see right here. They're trying to land them safely without causing the market crash or any of these planes from crashing. It's that simple. Now, what's coming up? I've almost done all the research.
I'll check out your video about it, Tony. When that comes out, I'll check it out. Gauging off of all of the previous rulings and filings and rules and whatnot, you probably know where my default position would be. But you know, hey, I'll check it out. But what about this? Airplanes are FTDs.
And I'm fixing to release the videos probably tomorrow on how they're going to pay us. But for now, if you want to know what the holdup is, why have they not let this thing squeeze yet?
Obviously, the airports are backed up. That's why, right?
It's because of what you see in front of you. What I
Yes.
showed
Oh
you.
my God.
It's like an air traffic controller. With every stop, they're trying to fucking land these things without killing somebody. That's what the holdup is. Now, the solution is NSCC 2022-003. I don't care what your favorite YouTuber has told you. I'm going to be breaking it down for you word for word, and I'm going to show you what it means and how they plan on paying us. So, if you're a YouTuber and you watch my videos and you consider making a rebuttal video concerning what I'm about to bring, which is the truth, you better look behind you.
Uh-oh.
Because I've looked behind you and I know. Okay, I'll just leave it at that. I know. So, when I bring the video showing the truth, if you rebut it, I will call you out and I will show you that you should have looked behind you.
Well, I've been doing that now for however many months, calling people out. So, hey, I guess it's good.
It's as simple as that. So reconsider your interpretations and then let's talk. Love y'all. You are the most important people in my life. You are who I spend
Weird.
most time with.
Weird.
And due to that, I now have
Queen of Swords.
Brenda, Queen of Swords. So, and look, if I have any groupies out there, be cool. I usually, they don't put up with me for more than 6 weeks. I'll be single again. Hit me up in 6 weeks. You'll be tired of me. Love y'all. Be blessed.
Okay. Been a minute on him. Benji.
No dates, though. Hodl. AMC data points. Let's check this out. As of May 26, 2021, last year, just prior to the melt up to 72.62 versus now.
Oh, we're calling it a melt up now?
1776 versus 1734. DTC was at 1.4 versus 2.4. Utilization 99.5 versus now 100%. Shares on loan were 130.4 million versus now 131.9 million. No dates, only perspective and patience. Guys, what does this tell us? Obviously, there's no dates, and obviously, we're here for the long term regardless. But if history were to repeat itself, it shows that we are set up almost perfectly, if not better, for a massive squeeze towards all-time highs any day now. You don't get it. People telling you to sell, and then karma.
How
You
about
guys
we put
obviously
the,
do your own DD, and this is not financial advice, but realize that a lot of times.
How about we put the, let me go back. Can we add something to this post? Go back. There we go. Okay, all these data points. Oh, these are all great data points. Sure. What about the volume? Why aren't we talking about the trading volume? I mean, we can see it kind of reflected in DTC, right? We can say it in DTC. But, you know, perhaps we should just look at the volume. Why does it keep going to bonds? You think we're going to see this again? Where are we at here? Okay. 113 million, 213, 379, 705, 660, 500, 766, even into the mid of June, 300, 285, 166, 300. Okay. Even into July. Now we're looking at, well, most recently, 21 million, 29 million. Here was the increase in volume. 170, 68, 71, 226, 212. And then it ramped back down. This is the thing that you don't have. Without this, none of this matters.
Towards all-time highs any day now. You don't get it. People telling you to sell and then karma. You guys obviously do your own DD, and this is not financial advice, but realize that a lot of times in the past, at least in my experiences being in the stock market now, pretty much full-time for 3-4 years, so not that long, but I've definitely been around the block a little bit. Whenever people are telling you to do something, whenever the masses tell you to do something, normally the opposite happens. That's why.
Well, let's follow that. Let's play that analogy out. Everybody's telling you that there's going to be a massive short squeeze, and the opposite has happened. I mean, he's not wrong here. He's not. We've talked about this. We've talked about this very concept. But, you know, if you listen to the mainstream media, that's a whole other issue. So why you would listen to the mainstream media, especially when they tell you what to buy or sell, that's, you know, like I said, that's a whole other thing. But we're talking about in this little community, everybody's telling you, hey, this is going to happen, this is going to happen, this is going to happen. What happens? Well, not that.
There's a saying, buy when they're fearful and sell when they're greedy. A lot of times you're going to wander the opposite of what the general society, general market's telling you, at least in most instances. And everyone right now is saying to sell AMC stock. It's just an interesting thought. AMC fails to deliver past 1.3 million in latest report. Fails to deliver in shares of AMC Entertainment have passed 1.3 million in the latest SEC report.
Oh, okay. More stuff that doesn't matter, but we'll look at it. Oh, there it is right there, 1.3. And look at this. The next day, nearly all of them were covered over the next 2 days. Over the next 2 days, almost all of them were covered. Yeah, nothing burger with extra pickle.
In nearly a year of reporting on this, this is the highest figures I've seen. Fails to deliver. Hit 1.327 million on March 23rd. They settled at 103,000 at the end of.
I mean, you know, okay.
March, the last date for which information is available. Even that is an exceptionally high level compared to other stocks. AMC sometimes does a lot of volume, so we should correct for that. Let's compare fails to deliver with a number of shares traded for AMC and a few other major stocks below. I use volume data from Yahoo Finance. Here are the numbers for March 23rd. 1.3 million with 170 million in volume.
Well, that's not how many occurred on that day, though. I don't know where this article's from, but no, 753,000 were added that day to get you up to the 1.3. So, yeah, this is
in
same typical stuff.
Failed. Apple, 1,150 with around 800 million in volume. And almost none of them failed.
Why don't you have a column for the free float on here? What's the float?
800
What's the
million
short
volume.
interest?
And almost none of them failed. Amazon 81 failed, Google 0 failed, and Microsoft 2.
Because they're all selling that shit.
Failed. So we get the point here. Obviously, there's something weird going on. Look at the fails to deliver compared to these other gigantic companies. If you look at the other day, the numbers change a little, but the overall picture remains the same. AMC
Quit buying on payment for order flow brokerages too.
Has far more trades failing to clear than other stocks, both in absolute number and percentages of shares traded. Why are so many AMC trades failing to clear? In stocks with persistent patterns of fails to deliver, such as AMC, naked short selling is a common culprit. But if you want to stay up to date with everything else that's going on with AMC,
So we're in this snake oil cycle, And there's some interesting, okay, snake oil cycle. Fake squeeze coming. Remember that? Remember the fake squeeze nonsense? I can't stand this guy, so I'm not even going to watch it. Can't stand him. Let's see. We come to liberate the stock market.
All right, guys, what's going on? Good morning, John Wick sniping. We've reached another Friday of another long, grueling stock market week.
Another long, grueling stock market week. Oops. Whoops. Whoops. Is doing. Okay. Okay. All right.
And you know what I always say? Rest up, because next week is just the same old, same old. Got some more certified members that I want to shout out right
Certified
at the beginning
members.
of this video. Number 29, Chris King Callis. Number 30, Better Than Me Yesterday. Number 31, I'm sorry, buddy, if I don't get your channel name because it's so funny. Fartaculasticus Spastasticals. He's the guy that puts on like outfits, but it's a good video. It's definitely a lot better than that last one that I saw. So thank you very much for that video. Number 32, Arrow Rojas. Number 33, Porsche 911 S-Boy. So that is all the way up to number 33. And in this video, in the description, I am going to put all 33 people this time. Inkslinger69 suggested.
So you have to.
I guess he wants it where I put everybody on every video.
Show
I
your
can do
position,
that.
I guess.
That's a big problem. So Inkslinger, I'm going to change up on that one. Every time I get new people, I'm just going to put the whole list. That way, if somebody new sees the videos, they can look at all the videos. So I think that's a good idea. So thanks for that suggestion.
Bag holder certification
All right, so
program.
as I'm sure a lot of people notice, because
Manny.
even though they try to act like they don't, I know a lot of people keep track of views and subscriptions. And if you kept track of my channel,
Well,
I blew past 5,000.
regarding the Cam CS Trades Wolf Pack, Alpha Wolf. Seems like he deleted a bunch of videos off of his channel. He took down, or now they're private. So I noticed that earlier. Weird.
Somewhere last night. I've gotten a couple congratulatory messages from some people, so thank you very much. And that can mean one of two things. Either there's people on board that want to be attached to the channel and kind of like come on board with being certified at some point, or
certified.
I've just gotten a bunch of haters back on that want to see what the hell I'm doing and keep track of me. I'm really, really excited about what we're doing. I'm really, really happy with some of the videos that you guys are following up even after your share position videos. You guys are talking some good stuff. The Loon family, he's a guy that says some really good things.
Yeah.
And they've shouted out some other guys and continue to do so. When
Just going to talk about how
are going to get it, because it's just not moving organically. You know, I always say that. And you guys can see has anybody ever thought about this? I know I think about it. Do you think one meme stock is going to run? They're not going to do that. They're not going to let AMC run and leave GameStop behind. They're not going to let GameStop run and leave AMC behind. You want to know why? Because if one rips, let's just say AMC went to 1,000 but GameStop went nowhere, right? What would you do? You would take a large part of that money and you'd go into GameStop. They're not going to let that happen. even further than that, let's just say they let all the meme stocks go and everybody makes money. So you make money in GameStop, you make money in AMC, you make money in Bed Bath & Beyond, costs, whatever have you. And then what are you going to go do with that money? You're going to go into a blue chip, right? Amazon's got crushed. Great time to get in there at some point, right? You're not going to let that happen. You're not going to let the meme stocks run up and then you take your money and go over to Amazon. You know why? Because that means that retail would own the stock market at that way. So that's why they're moving it the way that they're moving. That's my theory. This part real quick, I'm talking to the certified members and you guys can tell me what you think. Maybe on your next videos. I'm thinking of two things here. I may open up a separate channel off of my John Wick sniping channel. And I have a name that I'll tell you in a second. But I'm thinking about
hitting the mainstream here.
A separate channel for the certified members and only keeping certified members on that channel. Meaning if anybody attaches themselves to that channel that is not a certified member, see ya. You're not going to be allowed to be on that channel.
Oh boy, wow.
Some other ideas. But that's what I have in terms of the group name for right now. The stock market. A lot more confident talking to my certified AMC members. I feel now that I know them. I feel like I know Inkslinger, for instance.
So this is like, you know, what's the word? But he's you know, he's separating. It's segregating, you know, the community. Can I send him my short and put positions to become a certified member? No, I don't know. But you can do it here. You don't even have to show your positions around here. You can be a certified AMC short. Yep. I keep wanting to have a AMC short seller Twitter space. But oh look, we don't need to wait for Tony's video because Short to VIX is going to.
What's going on?
What's going on, guys? Today in this video, I'm going to tell you. Short to VIX is going to tell us all about it.
In this video, I've got another very important.
In his usual mature, mild-mannered, non-entitled way.
For an AMC update to bring all of you this afternoon. So what we're going to be covering in this update is a little bit of the price action and the technical analysis that we have seen on AMC, specifically on yesterday's trading day, Friday, the 29th of April. In addition to this, we also have to take a little bit of a look at the ortex data that we're seeing on both AMC and GME. We are going to take a look at the max pain data going into next week. But with the overall volatility of the market right now and things really not looking too good in terms of basically the entire kind of U.S. economy heading towards a recession, we had negative 1.4% decline in GDP. If we have another quarter of declining GDP, that is going to signal
negative 1.4% decline in GDP. So it went up. Is that what he's saying?
We have the Fed coming in looking to raise interest rates. We have inflation running really hot. We have the Russia-Ukraine conflict going on right now. There are a lot of things that are pointing to significant downturn or volatility coming in the market. And the DTCC has just issued their newest wave of collateral haircuts. I want to give you guys a really in-depth understanding and breakdown of what this means, because this is going to be really important going over the next couple of weeks and is going to lead.
Maybe if Tony's here, he can review this explanation for us.
To a significant amount of margin calls. Now, when you guys think about margin calls, you have to think about them in a couple of different ways. One, it is very, very rare to see a news article coming out that, oh, this institution got margin called because of this, this, and this. That rarely happens. The only time that I've really seen this over the last basically 2 years was the UBS situation where they were downgrading the value of those Russian bonds, and they said that could lead to lots of margin calls. But with the overall kind of trend of the market recently, these calls have been going out left and right. And thinking about kind of the situation with Archegos and Bill Huang, where Bill Huang basically just didn't answer the phone to essentially hear.
Yep, the wheel of the snake oil cycle keeps turning. And we are, you know, margin calls, that one has multiple spots on the wheel. It comes up a lot, you know, but really never really goes away. But yeah, it's always, you know, kind of a, you know, Yeah, we need that negative beta.
What Credit Suisse and a lot of these other banking institutions had to say to avoid the margin calls. This is very different. This is changing the overall rules of the game on the people who are playing it. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing.
That's so pretentious to assume that you provide information and analysis in a video. Like, I would never make that assumption.
If you guys do want to kind of take advantage of this opportunity and the volatility in the market to learn how to make money in this kind of marketplace, make sure you check out that link down below to the discounts every single month, one-on-one as well. So AMC closed the day on Friday at $15.30.
Here's our play-by-play.
Down about 2.17% here. But the overall market, the S&P 500, was down about 3.7%.
Oh, he's going with the same thing that, who was that before that we looked at and went with? I forget, but, yeah. Well, guess what, guys? The market was down, and so was AMC, but the market was down more. AMC wasn't down as much as the market was, so we won. We won. Well, okay. Sure, you won.
Typically, in the past, when we have seen giant red days in the overall market, AMC has had double-digit percentage red days. That is not what we saw on Friday.
Okay. Let me get rid of these boxes. So many boxes. Okay. So this orange line is the S&P 500. Maybe I should just go to daily. There's a green can. I mean, yeah, he's probably right.
Now, it's not fun to see AMC down 2% on a day, and especially the day before when the market was really rallying, AMC didn't really come with it. What we're kind of waiting to see here, honestly, is a picking the direction of the trend of the overall market. You guys have seen the videos that I've made about kind of the timing of the last kind of run up in the SPY from the 14th to the 29th of March, and it lines up perfectly with the run on AMC. So if we start to see the market pick an overall direction to the upside or the downside, we're going to see the AMC start to move with it. Now, taking a look at this on the 4-hour time frame really quickly here, again, we are still waiting for that 1348 cross to the upside. We are just kind of hovering this 13 on the way down. We need to see some clean breaks to the upside. These crosses, these closing candles above the 200 EMA, very similar to what we saw back here to really send us going back to the upside. So let's do a little bit of a quick breakdown of what we have going on with the ortex data. Before we get into this situation with these big margin calls, these collateral haircuts, and what all of this means and how it's going to affect you. So we have 18.96% estimated short interest on AMC here. We have 1.91% average cost to borrow, 2.73%.
But what about this one up here that says 18.88? Why? What is that? Why is it 18.96 and not 18.88? And bigger question, why does it show two figures for it? I don't know. Don't know. All right.
Max. We also saw about 988,000 shares borrowed on Friday in terms of the net amount of shares that was borrowed. Now, GameStop over here, 20.09% estimated short interest, 12.66% or 12.66 shares borrowed.
You want to know one other thing too? We got this new column in here: value of ortex estimated short interest in U.S. dollars. Value of ortex estimated short interest. Okay. So what does that mean? Well, what you could do is you take the, where is it? Current estimated short interest, 97 million, 9.7 million, whatever, multiplied by the, what was the price of AMC? 15 something, let's just say 15. That's about 1.5 billion. So this is just basically the short interest times the stock price. So if that value goes down, what does that mean? What does that mean? Well, it could mean that the stock price went down. It could also mean that there are fewer short positions on, right? So I don't really know how useful that is. Let's see, we got Mr. Linoge, Mr. Linoge. I don't understand your angle or what you're trying to prove. Well, that's not surprising. That's not surprising. Short interest decreasing and the price decreasing. Earnings preview, less EPS because investment on projections, buying other movie theaters, higher rent and utilities. AMC continuing to be unprofitable.
73%.
Okay.
And max. We also saw about 988,000 shares borrowed on Friday in terms of the net amount of shares that was borrowed. Now, GameStop over here, 20.09% estimated short interest, 12.66% or 12.66 million shares estimated to be sold short, 6.72% average cost to borrow, 9.87% max. Then going over to the max pain data really quickly before we start talking about a lot of the important stuff, $17.50 going into next week. But again, max pain, we haven't really seen us finish around max pain over the last couple of weeks. So this is not going to be the end-all be-all of where we are going to trade on any given week. But it is helpful to kind of look and see where the options are placed in terms of where those key levels are for delta hedging of market makers. So let's get into this DTCC
But she still keeps
what they're talking about here.
The old understanding of it.
There's a collateral
as if nothing's changed.
Haircut. Now, what is a collateral haircut? The important thing here in finance, a collateral haircut, is the difference between the current market value of the asset and the value ascribed to that asset for the purposes of calculating regulatory capital or loan collateral. The amount of the haircut reflects the perceived risk of the asset falling in value in an immediate cash sale or liquidation. That is a very, very, very important piece. So when we are going to be looking at all of these haircuts right now and what they mean, any sort of percentage is what the haircut is. So if it's a 2% haircut and you have a security that's worth $100, you can only use 9.
Yeah, we get these people from time to time. I guess the real question is why do care what other people are doing with their money? If you're that concerned, why don't you talk about Jim Cramer? Let me be absolutely clear, okay? I don't give a fuck what you do with your money. I really don't. I couldn't care less. All right, it's your money. It's a free country. It's a free market. You can do whatever the fuck you want. That's not debatable, you know. But, and I've said this from the beginning on this channel, and because the one that I had last year that was deleted. This channel has always existed to call out the nonsense grifters, lies, fraudulent information, promises of easy wealth, yada, 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 put out by the influencers. Okay? So if you don't agree, if you agree with these influencers, then there's no reason to watch this channel. There's no reason. But if you're interested in seeing the increasingly desperate tactics by these pumpers who have one goal, they have one goal, and that's to make money for themselves through pumping AMC, then, you know, if you enjoy seeing that and seeing that fact-checked and made fun of, then you know, then you might be in the right place. So, but as I said, I don't care what anybody does with their money. I mean, there are always going to be people who lose money in the stock market and other ways. So, you know, and I realize that nobody will listen to what I'm saying. And the fact is, I'm not trying to get people to change their investing habits, really. But I just try to look at things from a factual standpoint and not an endlessly bullish standpoint. So, you know, when you remove your bullish bias, it seems like, you know, things have a different reality, perhaps. So, yeah, that's all. But I don't care. I don't care. Let's see here. Just a reminder, no one cares about your shares. It's the free entertainment we're here for. This is Manny talking. The more money you lose, the more we are entertained. So far, I am very entertained. So, yeah. Because they're being lied to about what's going on. YouTubers push lies to profit off views. Pushing conspiracy theories to gullible, uneducated new investors. And Chris says, but I like this channel because you allow dissenting voices and you say fuck when you get angry. Thanks, Chris. Yeah, I don't, because I'm not monetized. I don't have the goal of becoming monetized. It's not about that. It's just kind of a fun thing that I do. I started doing during the pandemic last year when I wasn't working. Now I am, so it's harder for me to do it. But anyway, Mr. Linoge, I don't agree with most of them, and I'm even more skeptical of the ones that have discords. Yeah, me too. Okay, so let's continue with this haircut.
$98 of whatever that security is to post as collateral. In addition to this, we're also going to talk about some of the things that kind of give these different securities risk. Now, a lot of these securities that are getting these haircuts...
By the way, Short the VIX has a terrible way of explaining things. Like, he jumps around so fucking much. Like, he can't actually explain what anything is. You know, he has to attack it from all these, like, side angles and stuff. It's so annoying.
Don't necessarily seem all that risky in a normal marketplace. So when we come over here, this is the notice that was sent out. So beginning May 2nd, 2022, for the settlement date May 3rd, 2021, the DTC will update the list of current lenders.
Wait, why is it May 3rd, 2021? Obviously supposed to be 2022, but that's interesting that they make that typo.
To the joint DTC and NSCC, National Securities Clearing Corporation, committed 364-day line of credit facility with a consortium of banks. Now, we see this list down here. You're going to see JP Morgan.
Okay, so we just skipped through the first part of this thing. Can we just learn about it first before you scroll through every fucking thing?
Facility with a consortium of banks. Now, we see this list down.
Okay, stop fucking scrolling. Jesus Christ. I mean, this kid supposedly graduated from college. My God. Okay. List of current lenders. The LOC agreement will be updated to include blah, blah, blah. As a reminder, to help manage intraday transaction blockages due to DCC's risk controls, participants can 1. Designate additional securities as collateral. 2. Process delivery versus payment transactions that will generate intraday credits. Or 3. Submit settlement progress payments via FedWire. Participants can monitor their collateral monitor balance via the risk management controls inquiry link in the cash and balances tab in the settlement web. Okay. So they can designate additional securities as collateral, process delivery versus payment transactions that will generate credits, or submit settlement progress payments through the online system. Okay. All right.
Down here, you're going to see JP.
Whoa, god damn, he skipped a lot.
Line of credit facility with a consortium of banks. Now, we see this list down here.
Appendix, god damn it.
Consortium of banks. Now,
I'm the asshole who pauses the videos and tries to actually look at what they're saying.
We see this list down here.
And the issuer banks listed in Table 1 below are the current lenders or to LOC agreement. Pursuant to the LOC agreement, securities issued by an affiliate of any lender are excluded as eligible collateral for securing a draw on the facility. The exclusion derives from compliance concerns for certain lenders of the Federal Reserve Act and Regulation W of the Board of Governors, blah, blah, blah. In general, Section 23A and Reg W limit the aggregate amount of covered transactions between a bank and any single affiliate of the bank. Covered transactions include bank's acceptance of securities or other debt obligations. Thus, to avoid running afoul of the restrictions imposed The LOC agreement excludes lender FIS as eligible collateral. Okay.
Here you're going to see.
And I'm not even going to try because it's just
Morgan, Bank of America,
it all again.
And a lot of these are other large institutions that we all know and hate. Now, when we come down a little bit further, here's where we start to get into some of these haircuts here. So this first section is going to be U.S. Treasuries. Now, U.S. Treasuries are typically going to be that risk-free asset, or it's supposed to be the risk-free rate or the risk-free asset that we're seeing here. So compared to some of the other securities that we're going to look at here, these aren't going to be as risky in terms of the risk that the lenders are taking on the purchasers of these securities. So when we're looking at the haircuts here, interest-bearing U.S. Treasury securities with remaining terms to maturity of up to 2 years, meaning there's about 2 years left until this bond matures, a 2% haircut, 3% haircut, 4% haircut, 6% haircut. That's not too bad. Zero coupon bonds, 2%, 5%, and then this 12% with remaining terms to maturity in excess of 5 years. Now, here's where it gets a little bit interesting. Mortgage-backed securities issued by a U.S. agency and U.S. government-sponsored enterprise, GSE. Interesting. So now these MBS, these mortgage-backed securities issued by a U.S. agency and U.S. government-sponsored enterprise, GSE, rated below AA2 or AA are receiving a 100% haircut, meaning that these can no longer be posted as collateral. You cannot basically buy these mortgage-backed securities and then use them to lever up. Now, we've seen kind of the developments in the real estate market recently. We've seen mortgage rates really start to skyrocket after the Fed has started raising interest rates. We've also started to see some of the foreclosure numbers start to pop back up. They're not at any crazy levels yet. If you look at the chart, it's kind of inflecting and coming back up. Those the levels of foreclosure, in my opinion, are not really a cause for concern yet. But if you continue to see that trend really start to skyrocket with these foreclosure rates, then it's really going to be an issue. And when we think about these ratings right here from these ratings agencies.
Okay, so this is all good, well and good. How does this relate to AMC? Right? We are 3/4 of the way through this video. Let's hear it.
Remember, those ratings agencies were one of the institutions that were really at fault back in 2008 in the time period around there for kind of...
Okay, but that's irrelevant here. What's the point?
Misrating a lot of these securities, kind of saying that they were less risky than they actually were. So when we take a look here at basically what AA2 is, this is Moody's. So AA2 is...
So again, he's going off on a tangent. He hasn't explained how this is relevant. All right.
The third highest long-term credit rating that the ratings agency Moody's assigns to fixed income securities like bonds that are of high quality and very low credit risk. So if it's still pretty high quality and very low credit risk, why is it getting a 100% haircut? Is there some sort of really large systemic risk out there in the market right now with these MBSs? Most likely. Now, there's a couple of other really important things that I want to kind of go over with you guys in this as well. Scrolling down a little bit further, let's see where we get down here. I think it's towards the bottom. I want to make sure that we get to the right one right here. U.S. equity securities. So equity securities listed on a U.S. national securities exchange. So these are going to be things like Apple, Tesla, Google, these types of companies. Now, it breaks it down in terms of with a market price of $5 or more per share or per other unit, or with a market price below $5 a share or per other unit. Anything above $5 a share is getting a 50% haircut. So you would need to buy, let's just say we're using Apple, for example. If you wanted to post $100 of, or you had $100 worth of Apple, let's just say in this example, and you wanted to use that as collateral, you can only use 50 of it. So if you already were at a position where, let's just say you were using a higher percentage of that Apple stock to post as collateral, and you can now only use 50%, that is definitely going to lead to margin calls because, one, you're no longer...
No, it's not. Oh, my God. Oh, that's definitely going to lead to margin calls. Definitely. Absolutely. I doubt it. I fucking doubt it. Hi, Lynn. Hi, Lynn. And correct. Lynn's absolutely correct. Hit the like button and subscribe to help the channel. Thank you.
Longer going to be meeting those maintenance margin requirements because remember I said earlier in this video, they are changing the rules. They're not necessarily going out and saying, hey, we're going to change the maintenance margin percentages on all of your different accounts.
Yeah, but isn't this to the banks and the prime brokers? Isn't this who this affects? Didn't he say the list of banks and all that shit that we love and hate, or know and hate before? I got to go back. This is for the banks, right? Go back. Go back. Oh my God. Here we go. These. Credit Suisse, State Street Bank, etc. These are banks. So this all affects the banks. All right. Let's move on to his next little spiel. It's probably about margin debt, I'm going to guess.
A few times, the FINRA margin debt.
Margin debt.
We're talking about these collateral haircuts, but what has margin debt done over the last couple of quarters?
Exactly. Because they haven't known about it, because they're just springing it up. They're catching them by surprise. Yeah, right. Because that's how this shit works. I mean, come on.
Now, we've taken a look at this chart a few times. The FINRA margin debt and the S&P 500 real values adjusted to present-day dollars. Remember, this chart's inverted right here. So on the left side, you're going to see as you kind of go down this chart.
Well, if you hadn't cut off the fucking left side, we could see it. But you cut off the fucking left side. So, no, we can't see it, idiot.
Here vertically.
Jesus.
It's also in billions. So when you see these numbers go down,
all we can see is zeros.
So when you see this giant spike here in this red line, that's margin debt. That means that margin debt is going down. You can also see it kind of lines up with the S&P too. The S&P starts to come down as margin debt decreases. And this is a trend that we start to see a lot throughout history. Now, this is basically telling us is that there's a really, really large wave of deleveraging coming. Now, could this be the result of margin calls? Yeah, it absolutely could be. And could this pick up with these collateral haircuts? Yes, it absolutely can. But this also could be the result of people flying out of the market right now because there's just so much risk and there's so little opportunity to get yield in this marketplace. So that is going to wrap up this update on a...
There's so little opportunity? Son, if you're a hedge fund, I don't think that's true. I don't think that's true. Okay, but learn your 1348 and you'll be fine. He's insufferable anymore. Oh my God. All right. And not to mention, hey, if there are margin calls, that doesn't mean does that mean it's going to force the shorts to close their positions? I'll use the ape terminology. Does it mean that it will force the shorts to close their positions? I've heard people say that when margin calls happen, they automatically liquidate your short positions. I've actually heard that by people like Frankie Mohammed and, you know, that level of YouTuber. You know, come on. Collateral haircuts. Forced squeeze. Charles Payne just confirmed it. But let's check in with Kiev Angelo. See how this is going.
You know, they say the best time to invest on the stock market is when there is a blood on the street. Even part of this blood to be yours, right? But the problem is that even the blue chip stocks are selling off like crazy. Where actually you should invest? According to the latest reports, Elon Musk, after acquiring Twitter, will become the most in-depth CEO in the United States of America. Obviously, the best time to be alive and investing on the stock market, right? And I see a lot of hype around AMC community about the current adjustment from the collateral from the DTCC, and this will have definitely a major impact over the banks and any institutional investor who will be using leverage further on. But as crazy as it sounds, I believe that people who actually follow here the channel and listening and watching the videos, I think we already talked about this before even knew that this is coming. We talk about that the current collateral will be melting like an ice cream in Miami, right? Simply because the value of their portfolios, the value of the assets, everything plummet. And when you see that the market is going to the end of the cliff, to the edge of the cliff, if I have to be more correct, you will see everyone is trying to secure on his own. They will start cutting ties. They will start reducing their exposure. Like I said, nobody's buying the dip. And the most important is that if some of their friends fail, most likely they won't be able to help them out. Something that we saw with Melvin Capital when Melvin struggles during the first spikes of GameStop. we have 0.72 and we have Citadel Securities show up and help him. But these market conditions will be different. If somebody fail, nobody will be able to help them out. Even the government won't be able to have any bailouts available for anyone. So pure jungle conditions on the stock market, guys.
Oh, really? Oh, really? No bailouts for anybody? I don't know.
And the point over here is that the apes have been losing for $72 all the way down to the current prices, and they don't bother anymore seeing losses. This is why I believe that institutional investor is the one seeing for the first time, is experiencing for the first time what is it to lose 30-40%. This is why I believe individual investor is much better positioned, because it's already trained. We already have this mindset that the stock could go 30-40.
Yeah, but by and large, retail investors are biased to the long side, biased to the bullish side. It's either buy long positions or sell, liquidate long positions. By and large, retail investors don't understand. They don't hedge. They don't understand short trading. It's not always the right thing to do to buy something. And that's, kind of a big thing. But anyway, particularly the meme stock investors.
50% or can slowly lose value, but let's put it straightforward. The short squeeze place couldn't go lower, right? If the market crashes, or even if we see the recession, no matter what, the short squeeze place at some point, meaning that they just have to go up, simply because any market reaction, any major negative market reaction will enforce anyone who bet against this place to create a cushion of cash, which means essentially selling all of the long positions, covering any...
Wait, I gotta go back and hear that.
Any market reaction, any major negative market reaction will enforce anyone who bet against this place to create a cushion of cash, which means essentially selling all of the long positions, covering any loose position on the market, and just sitting around and waiting. This is something that I talked about with one of my friends yesterday. There was a major jackpot here, $400 million, and somebody won the jackpot. And there is two types of way in which you can actually withdraw the award, right? So you can get it cash right now and pay substantial amount of taxes. In this case, you will be getting, if you want to withdraw right now, out of $400 million, getting it right now will leave you with $280 million only. But the point that I mentioned is that it's good time to have your money right now before the recession, because you will be able to buy the dips in everything. After the recession or during the recession, you will be able to buy the dip in the real estate. You will be able to buy the dip on crypto, on stocks, everywhere, right? There is an old quote saying that $1 today worth much more than $1 tomorrow. We all know that. So going back to the same strategy and point of view, this is why a lot of these institutional investors, when they see that the market is going to a 90% chance of crashing or correction or a recession look alike, right? They won't be waiting anymore, because currently all of them are procrastinating. All of them don't want to close or cover their losing bets, right? All they want to see is that, this is most likely a short-term forecast, right? They still believe that, Jerome Powell will come up with the magic wand and will fix everything, which is not going to happen. A couple of days ago, I looked into a specific blockchain-based software which was able to adjust the real level of inflation. If I'm not mistaken, the website it's True Inflation. You can Google it, and the true levels of inflation, the current true levels of inflation according to this blockchain website, it's around 13%. You understand the real inflation versus the reported inflation, something that you can make association with the reported short interest and the real short interest in AMC stock, right? So definitely Batman.
No.
Most right. It will get worse before it gets better. But definitely, guys, don't get too hype about the DTCC new adjustments of the collateral, which are effective.
Don't get too hyped.
Okay. this is a good thing. Definitely will squeeze and will again remind a lot of institutional investors and the banks that, you know, be careful. There's a big dip coming ahead, so be careful. Don't over leverage yourself. Be careful who you actually loan money for, what kind of investments, and definitely you want to make sure that you have enough money if things actually go south. I hope you guys have an amazing weekend. Subscribe to the channel, like this video, and
wow, that was amazing. Okay. Short volume exploded. Do we even need to talk about that? I saw that on Twitter too. Or I'm sorry, Reddit. Somebody was hyping the short volume. Let's see if we can find it here. Go home, market. You're drunk. Go home, Ortex guy. You're an idiot. AMC short volume, 70.4%. The highest since June 2020. I find it funny that we've seen daily short interest of over 55% just about every day for a year, and yet exchange reported short interest has never been over 22. I think they mean short volume there on that, but yeah, nobody got it correct. Nobody got it correct. We know that short volume does not equate to short positions, so. What is the floor now these days? Well, let's see. What is the floor? Got to be close to 2 million by now. And prison. 1.4 million. Bro. Floor is prison. Prison is the only floor. Jail for Ken Griffin. I mean, come on. Yeah. Hedgy, this is my porn. Fucking Ortex guy. Like, do you not understand fucking hedge funds, dude? Clearly no. Or you're a shill. Hyping the fact that the market went down, throwing that in a hedge fund's face. I mean, it's stupid. Stupidity. Stupidity. Silenced / killed for speaking. Oh, God. All right, this one's going to be tough. This one's going to be rough. But we'll do it. Welcome back to the channel, everyone. Welcome back to the channel, everyone.
Welcome back to the channel, everyone. Today I want to talk about how whistleblowers are being silenced. Now you may say, Tom, what kind of silencing are we talking about? And this right here is the exact kind of silencing. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, a Deutsche Bank whistleblower has just been found dead in his apartment in Los Angeles. And now what makes this even crazier is the fact that this isn't just any old Deutsche Bank whistleblower, this is actually the son of a Deutsche banker who committed suicide. And now I imagine this is the exact same kind of suicide that Jeffrey Epstein committed. I'm sure that this Deutsche banker definitely wasn't removed or killed or gotten rid of.
Look at his AMC sign back here. At least he got the shape of the curve correct. Like, whoop, down, up, down. He's got it in a downtrend.
But anyway, let's continue. It says a self-described comically terrible spy who is believed to have worked with federal authorities investigating the activities of Deutsche Bank and its ties with former President Donald Trump was found dead east of Lincoln Park, police said on Tuesday. He was found at 7 a.m. Monday morning
one
in
of
the
Trump's guys did it then,
block of Multnomah Street, according to the Los Angeles City Coroner's Office. He was reported missing last year, according to the Los Angeles City Coroner's Office.
It's not Corona's office, it's coroner. Okay? Corona office. Jesus.
He was reported missing last year and was last seen driving a red Mini Cooper on Riverside Drive. But weirdly enough,
I hate him
throughout
already.
his reported disappearance, his Twitter account remained active, and he also apparently maintained contact with friends and with journalists. The journalist said that he supplied him and other journalists with Deutsche Bank documents that highlighted the bank's deep Russia connections. It is very sad, but he does not suspect foul play. His last tweet actually came recently as of April 5th, 2022, so only a few weeks ago, and now he's all of a sudden turned up dead. I, for one, definitely suspect foul play in this case, considering what's happened to him recently and his father before that. Obviously, this case isn't directly tied to Citadel, it's more about the Deutsche Bank connections with Russia. But I think this really explains why we haven't yet seen Citadel whistleblowers or other whistleblowers as a result of the AMC and GameStop movement. Obviously, I'm sure that many Citadel employees and Melvin Capital employees and employees of other large hedge funds know what's going on is absolutely criminal, and they do have verifiable evidence. But even though they have that verifiable evidence, they know that as soon as they blow that whistle, that it won't be long, maybe a few weeks, until they're found having
Listen to all that speculation. Holy shit. That was all speculation. Oh, I'm sure that they have this blah, 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 and blah, 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 blah. Yes, he should definitely be working with Alex Jones and Jeff Rentz and I don't even know who else. Anybody on AM radio overnight. I mean, this is, listen to all that speculation. It's all speculation and bad speculation at that.
I'm sure that these employees at Citadel, at Melvin Capital, and these other hedge funds know that telling the truth is the right thing, but they also know just how rich and powerful these hedge fund owners or hedge fund managers really are.
Oh, yeah.
And they know that obviously if they do end up blowing the whistle, not only does it put them in danger, but also potentially puts their families and their friends in danger as well. And therefore, even though that blowing the whistle is the right thing to do, they know that it won't take long until they turn up dead only a few weeks later. However, it does seem like Bloomberg Finance is potentially blowing the whistle by relating other hedge fund managers to Bill Hwang. Bloomberg Finance said there's a lot of money managers out there, maybe they won't say it publicly, but they're probably doing the same thing as Bill Hwang, but they don't think that they're breaking the law. AKA, there's many other hedge fund managers out there that are using ridiculous amounts of leverage, hiding their true positions, and increasing their synthetic short or synthetic long positions. But so let's also hear what Bloomberg Finance had to say.
What further details are you looking for?
If you read through the entire complaint, a lot of the folks in the markets are trying to figure out exactly how they can turn the screws on Bill Hwang. He did build up outrageous size and position in a number of these stocks. That itself does not sound criminal. So they'll really have to make a case as to why trading more than 10-15% of a stock's daily volume is wrong. Because he was trading a lot on swap, as we know, he believed he did not have to disclose his position when he got to above 5%. How does the government make the case that that was wrong as well? Do they show the intent? And of course, the fact that he was lying to the banks.
Yeah, I mean, it does get very complicated. And a lot of things that you say that Bill Hwang did, there are a lot of, frankly, money managers out there who say, maybe they won't say it publicly, but they're probably doing the same thing. Yes. And they don't think that they're breaking the law, just to be clear.
Yes, but when you have such a spectacular collapse, that will force a lot of people to ask questions, and people will not be satisfied unless there is clarity at the end of it. And prosecutors really want to make an example of someone. And if you were to get Raj Rajaratnam on the phone today, he would encourage you to read his book, Uneven Justice.
And I think that really summarizes it. There's tons of other hedge fund managers that are doing the exact same thing, but considering there has been such a spectacular blow up, the Fed and the government really need to make an example of Bill Hwang. Hopefully this does deter other hedge fund managers from doing the exact same activities that Bill Hwang was doing and steadily reducing their...
Bill Hwang was not a hedge fund manager, first of all. He's not a hedge fund manager. Not. I just literally flushed something with more investigative integrity than this guy down the toilet.
Positions, aka covering their over-leveraged shorts. Whether they cover their over-leveraged shorts slowly or all at once, it will push the price of AMC and GameStop upwards because obviously these shorts are going to be buying back millions and millions, potentially even billions of AMC shares. And obviously,
but what if at the same time that all those shorts are covering, and I mean the same time, like algorithmically so, all those positions owned by BlackRock and State Street and Vanguard, all those hundreds of millions of positions owned by institutional investors, what if those start to get sold? What if those start to get sold? Not short sold, legitimately sold. The positions are unwound. What then? What then? Something to think about.
Those funds to buy back millions and millions, even billions of shares. They have to buy them from us, the AMC retail investors.
No, they don't.
At whatever price we're willing to sell our shares at.
No, they don't.
This has led to tons and tons of memes, similar to the video that I made the other day about how Bill Hwang may have just sold out Ken Griffin. Guys, many of you may not have a lot of confidence in the stock market.
Yeah, put your confidence into Bitcoin.
3 short on $9. He said it's
up Model 3.
Robinhood, a very low to get up to $250 in free Bitcoin. There's also been a very interesting reply by Charles Payne. The Kubesi letter tweet saying Robinhood, ticker symbol HOOD, is trading below $9 for the first time ever. He said the collapse of Robinhood, beginning with the halting of GameStop and AMC, is one of the biggest corporate failures in modern history. He said it's truly a self-inflicted collapse, which has been great to watch. And Charles Payne tweeted saying the Robinhood and media friends that attempted to defend the indefensible actions taken to cripple retail investors triggered an irreversible collapse, and only their hedge fund overlords have come out on top. He said it's a cold world. This is Charles Payne agreeing with and admitting that Robinhood did perform those indefensible actions to protect those.
Who cares what fucking Charles Payne says? He is a media grifter. As if what he says is like, you know, infallible gospel. These type of people say whatever, you know, they need to say to uphold the narrative. Not unlike Mr. Squinty Eyes here.
Those hedge fund managers, which has inadvertently triggered an irreversible collapse. Before I talk about the ongoing stock market collapse,
but let's talk about
touch on this very important.
Let's talk about the hedge fund overlords coming out on top, because that means that, you know, the retail investors came out on the bottom, doesn't it? It's what he's implying here. Yeah, it is a cold world.
Before I talk about the ongoing stock market collapse, I wanted to quickly touch on this very important tweet. He said, has anybody else noted just how quickly AMC and GameStop can run upwards, but then how much longer it takes the hedge funds to push the price of AMC down? AMC and GameStop can run up 50 to 100% in a singular day, if not more, but it takes them weeks upon weeks upon weeks to push the price of AMC back down. This goes to show just how volatile AMC and GameStop still are, and how these hedge funds are absolutely not in control, because a month or 2 months of those hedge funds work and that hedge fund manipulation can be ruined in a singular day. Yes, I suppose technically right now we aren't in control either, but neither are the hedge funds really. Yes, they do seem to control the price movement on a day-by-day basis, but as soon as they slip up, months of work can be ruined in a singular day. And I don't think it would take long until these hedge funds...
No, Tom. What they do is they cover fucking positions. They cover short positions. What the fuck do you think this is here? Seriously, what the hell do you think this is? Oh, it's just organic buying. Bullshit. Bullshit.
Do have a mess up big enough that triggers the AMC and GameStop squeeze. Inflation Tracker has pointed out that foreclosures are up 181% year over year, and has said that the housing market crash is starting.
And then what happened? And then what happened? Oh, it went right back down to where it was. Right back down. And you know what's interesting is, what happened from here to here? Hold on. From here to here. All this crazy nonsense, right? But where's the damn thing now? Essentially not that far off of where it was before, right? So yeah, this is returning back down to earth.
That up by saying that mortgage applications are down by 8.3%. Previously, they were only down by 5%, which means that so far, mortgage applications are down over 13%. Zero Hedge says that this is also showing signs that the housing market is starting to crack. Obviously, back in 2008 or before 2008, the housing market began to crash first, before the stock market followed shortly after. And as FinTwit News elegantly pointed out, those Fed officials sold all of their stocks here to avoid any potential conflicts of interest. You may remember back in November, December, all of these Fed officials were touching on the conflict of interest from trading stocks, and many of those Fed officials actually sold off all of their stocks to avoid any potential conflicts of interest. And obviously back in November and December is right where the market was at its very tippy top position. The market will soon be breaking down through those recent January, February and March lows and continuing the market crash. And actually, if we look specifically at the NASDAQ has already broken through those previous January, February and March lows and is setting new April lows. Suburban Drone tweeted this saying it's the chart of the month. It's the worst month for the NASDAQ since October 2008, worse than March of 2020. And also said it's the worst April since April 2000, just before the Fed raised rates by 0.5% in May 2000. And obviously right now in April of 2022, the Fed is once again set to raise rates by 0.5%, if not by 0.75%. I do expect this market crash to continue, and I believe the NASDAQ could fall to those pre-pandemic highs, aka around $9,000 to $10,000 at the NASDAQ. And if we look at this chart from Stocks, we've now seen a new all-time high in the reverse repo market. Today, the 29th of April, we saw 1.9 trillion just around the corner. So guys, be sure to let me know.
Everybody's saying the same thing, really. Kind of. All right. Okay, Moon Market. Who the hell is this? This is new. This is new to me.
Short squeeze alert and a 1-cent penny stock all the way at the end of the video. Drop a quick like on this video and smash that subscribe button. If you do like making money, I got your back right here, and turn on the notification bell so you don't miss any of these big runners I'm about to talk about in this video today. Most of the market is tanking today. Just look at SPY. Down at 3.69% today. This was a tremendous red day overall in the market, but there was a lot of small caps and even OTC stocks making a nice move. Look at Amazon, down 14% today, and this is the company with $1 trillion market cap. So when they lose 14%, it wipes out billions of their valuation. Now, Amazon is presenting an opportunity at these levels, in my personal opinion. Yes, I believe it is an opportunity for a long-term hold, you know, to get in low and to be the backbone of your portfolio. Getting in an Amazon when it's at 2020 levels and putting in your Roth IRA, for example, long-term would be a smart move, in my personal opinion. NASDAQ is down over 4% today. This is NASDAQ's worst month since $2.50. The first time I covered this was April 21st. This, everybody, posted a whole DD pack. We love the number 69, and it hit a high of $6. Between 79 cents and $4, you had all this hype. You had titled RDBX, the ultimate penny stock.
He's still talking about Redbox?
This running up. This is YouTube where you can hop on there. You can stream chart. So on my previous Redbox video,
wow, okay,
they shorted and are now on the threshold list as of today.
On threshold list. Yeah, we know what that did for AMC, right? Oops. This is what margin calls look like.
Ladies and gentlemen, the stock market got absolutely destroyed today. S&P 500 down about 3.6%.
Nice hat.
Even down slightly here and after. I was getting a little bit of a bid from the bottom, but the markets overall got destroyed. And here's a little fun fact. The NASDAQ 100 falls 13% in April, which is the largest monthly drop since 2008. Amazon closes down 14%. Not a good day overall for the market. So we have a lot to talk about, ladies and gentlemen, what to expect for next week and exactly what you guys need to know, because this is going to be either the short-term bottom or this is going to lead into a much larger event. So let's dive into it. Hit the like button, subscribe to the channel, do what you guys got to do. Let me know your thoughts on this move today. We actually as well seen a $7 billion market on close, a 7.3 billion dollar market on close. The last time this actually happened was on the S&P 500 back here when the markets did drop about 4% in a day and then ultimately did revert back. So that was just a fun fact. If you guys don't know what market on close means, MOC, it essentially means the orders that are going through at the last minute. So there was definitely a rush to get out of positions, and you're likely seeing a lot of margin calls that are currently going on with individual stocks. Some stocks are rallying really hard. Look at Redbox right now, right? But margin calls are really happening for these hedge funds and institutions because the margin debt is still extremely high. If you look at FINRA margin debt, you can see the margin debt is still way up there at about $800 billion. So there's a lot of room to continue to come down. And what we have seen from earnings, which is kind of the most worrisome part about all of this, what we have seen from large earning decliners like Netflix, like Facebook, last earnings, they tend to trend down for quite a while, even if they do get small bounces here and there, like we've seen with Amazon. Amazon was down like 20% at one point, did only close down 14%. They've seen a little bit of a bounce, but the continuation is likely to happen here with those stocks, as well as, in my opinion, it could be for the broad markets as well. This is definitely not setting a good tone. This is actually the lowest close that we have seen of 2022. Right here, we did bottom out at 409.37, but this is the lowest close. So there's a lot to talk about. First things first, though, I do want to talk about next week and the Fed. So we're selling off into the Fed, and it's expected the Fed is going to raise rates by 0.5%. Now, if they come in lower than 0.5%, they come in at 0.25%, that's going to be a very good thing. If they come in at that 0.5%, it's really 50-50 what's going to happen to the markets, because on the one hand, we just got GDP that showed a decline. So if we get one more quarter of declining GDP growth, we are technically in a recession. Well, if the Fed comes in and they only do 0.25%, people might say they're not doing enough to get inflation down. Stock market could sell off based off of that. Or if they come in at 0.5%, there could be the argument that, hey, you're going to push us into a recession, everybody panic and sell everything, right? There's two sides of the coin, and there's a good argument for both of those. So let me know down below in the comment section, what do you guys think is ultimately going to happen coming at the Fed meeting? That is next Wednesday. So midway through the week, exactly 4 days, 21 hours, and 54 minutes away, you're expected to get that Fed 0.5% rate hike. That's what the markets are firmly pricing in. Pretty much a 50 basis point rate hike at every Fed meeting throughout the rest of this year. You can see all of these are sitting at 100%. So you got a lot of moving parts going on right now. You still have earnings coming next week, but they're not the large stocks. They're not the stocks that are necessarily going to move the markets in a very dramatic way. So that is the thing, and we do have some economic data for next week as well that I do want to go over with you guys. Let's do next week. Let's go ahead and see. The Fed is going to be the main thing, so just keep that in mind. But you do have some other things.
What about AMC's earnings?
Job openings. That's going to be very important. That is the March data, expected to be a high volatility catalyst event. You do have API.
Oh, it's the following week.
Oil inventories as well. That is on Tuesday. And then on Wednesday, you have ADP non-farm employment change. That's very important for the Fed. And you also have ISM non-manufacturing PMI for Wednesday, crude oil inventories again on Wednesday.
Is he going to say anything?
Now, and that's why a lot of Chinese stocks
look at the
were up
news.
massively today.
9% positive.
Okay.
Been talking about China stocks really did help the markets as well. So that is basically that. Now let's dive into AMC specific data that you guys need to know. And let's go ahead and pull this up. So the option activity for the day was 49% positive order value, $161.96 thousand dollars worth of orders. And then for the short interest, you're looking at 18.96%, cost to borrow max of 2.73%, current shares that are sold short of 97.72 million, utilization of 100%, and days cover sitting at 2.5. So this, you know, it's one of those things where there's a lot of shorting going on, but I don't think it's all being reflected here in this ortex data.
Of course not. Of course not. Of course not.
Unfortunately, that we don't get the best data reported with ortex, but that's what we have to work with.
Then why do you use it?
Now, you are seeing a lot of puts every single day that are coming in that are helping to drive down AMC stock as well. Now, AMC was only down 1.92% here on the day. So, comparatively to what the broad markets did, NASDAQ dropping 4.17%.
Everybody's saying this.
Down 3.63%.
Well,
even the Russell
market was down 3%, but AMC was only down 2%, so we're winning.
AMC only dropping 1.92%. In my personal opinion, take it for what it is, I think is a very, very good thing. Or that's including the move here in after hours, but 2.17% still on the day is not bad. That is actually very, very good. So AMC still
spin. How in the fuck these guys are the only guys that can spin a negative number into a positive?
Last night, and I was talking about this for a while now. I think AMC is going to hold up a lot of support around $15 per share. If the markets do continue to sell off and we do go into a crash-like event, then sure, we could go under 15. I don't
we could
necessarily think that is going to happen, and that's not where I would put my money at this current point, right? I'm not gonna buy puts on AMC. I'm not gonna short AMC. Obviously, I buy and hold. The moves that we are seeing, only down 2% on such a bad day, is a sign to me that at least we are holding a lot of strength, and we're likely to continue to hold a lot of strength.
Yeah, that's ridiculously stupid.
The future $15 is going to be a key level. Under that, you want to watch that low that we did hit back in March when the markets did sell off at $12.90 per share. Call it $13 per share. That's going to be the key level. That's what I will be really watching and paying attention to. I simply don't think we're going to fall under 15. I think it's likely that the markets do bounce coming on Monday. It's likely in my personal opinion, but it's not impossible to see the market.
What if the market bounces and AMC flushes? Wouldn't that be funny?
To sell off like this, especially with the margin levels that we are currently at. So it's not that I'm bearish on AMC. It's actually the opposite. I think it's going to do well.
No way.
Due to the external factors going on, like the Fed next week, the volatility, right? Bad earnings from Apple and Amazon. It's going to be a little bit of a weird situation from here on out. So that is basically going to be all for this video. Not too much else to actually add. We'll go ahead and take a look at the max pain.
Why?
And
it's irrelevant. Okay. Yeah, all these guys are saying the same damn thing. Same damn thing over and over and over. All right. New revelations on BlackRock loan shares.
What's up, everybody? It's Common Sense Investor coming at you with another video. And today I want to talk about the impact of being right. Now, looking over my shoulder, review some of my older videos, and I have a couple that I was looking at. One's called What It Means When a Company's Vanquished. Another one is Blood in the Water. And when I did Blood in the Water, people were like, I said, BlackRock has been cut. We talk about the sharks that are in the water because they smell the blood and they're looking for their victims. And I said, uh-oh, BlackRock's blood is in the water now. See, they were the shark, but now the shark is bleeding. So And people gave me shit behind that video saying BlackRock is a $8 trillion company and they could care less about. Listen, you have never been rich, or else you would know that a rich person losing $1 is different than if a poor man loses $1, because a poor man's used to not having $1, but a rich man tries to recoup their losses as much as possible. So taking a break from my
So it's better to be poor.
studies on this new regulation that's going to be taking place, I go back and I watch my video, or I'm watching Boss Blunts here, because Brenda Queen of Swords, I don't know, I think she's a groupie for Blunts, but anyway. He has his picture here on his webinar, and it says that BlackRock loaned 40 million shares to help double down on the shitty bets to add more shorts to AMC. Now, this is not strange news to us. We knew this. We know that BlackRock and Vanguard and State Street and all you people who have got in heavily with AMC were loaning their shares out so that they could short. I realize a lot of y'all was upset about that. I don't even really give a shit. But now, revelation hits. Time for the chickens to come home to roost. You've loaned out 40 million shares. So let me explain how this works, people. You come to me and you say, hey, common sense, can I borrow $500? So you want to go to the casino. I said, now look, dude, I'm going to need that fucking money back. So I got you covered. Don't worry. I get paid Monday. I'll give you your money back. Blah, 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 blah. Cool. We go to the casino. They lose the $500. And they're sitting there going, oh, shit, how am I going to pay CSI back? When on the other side of the city, CSI is going, when's this motherfucker going to pay me back my money? The fact is, he don't have the money. He's broke. He's vanquished. When it's all said and done, BlackRock's going to end up holding the bag of AMC that they've loaned out that they can't get back. So I'll leave y'all to do the homework. What's 40 million shares times the current price of AMC? That's how much BlackRock is down from loaning their shares out. And now the hedge funds, the institutions, or whoever it is that borrowed it, they don't have the money to give back to BlackRock. So who suffers?
How is that possible,
Fucking
though?
BlackRock. Because if I loan my rent money,
what sense does this make?
And you can't pay me my rent money back, the landlord's not going to want to hear that shit. He needs his money. So now I'm the one in the position, because I was trying to help him out. I'm stuck and fixing to be evicted because I don't have the money to cover the landlord. And that's what's happened with BlackRock. They've loaned it out.
How does that make sense, though? Because, I mean, at what point would that have happened to where BlackRock cannot return they can't get the shares returned to them? It makes no sense. The price is lower than it was. The price is down from all of these levels. What is all this on here? And the reality is they own the shares. So I don't get this argument.
They don't have, if it's squeezed right now, BlackRock probably don't have any shares of AMC. They were counting on it being returned. So if they recall the shares, which is very possibly coming up in the next couple of days, because they're going to need their fucking money, but it ain't going to be there. Why? Because it's all, as one particular YouTuber from New York likes to say, the liquidity's dried up, bitch. There ain't no money. We don't have it. So what do you want us to do about it? BlackRock, and BlackRock just takes it in the ass. What they're going to have to do. That's my perspective of it. Tell me what you think down in the comments. I love y'all.
See
Be
what
blessed.
they say.
And Brenda says hi.
Hello.
Been saying it to my business partner who's in AMC with me. These dirty institutions can't dump on us until they recall their shares. And those shares been lent out multiple times, creating tons of synthetics. So it will take a while, and the price will jump to at least 4 digits before these guys get enough shares back to try to sell. This seems to be the Moass theory in a nutshell here. That means BR may let this thing squeeze and let it go way higher than anticipated in order to recover some of BlackRock. So BlackRock now controls it. They're the ones who could allow it to squeeze. What would you do if in BlackRock's, Vanguard's, or any else situation? 1, recall all lent out shares. 2, liquidate bigger blue chip and heavyweight companies. 3, sell off real estate asset class to cover the squeeze. I think I have an idea for what they're going to do. I don't want to put it here. Makes 2008 look like kids playing in a sandbox. Okay. CSI, we need to speak. I'm currently holding 5 Bitcoins, and this is spam. Oops, got hit by spam. They recall the shares. Citadel has to go find them and buy them on the open market, thus moving the share price up. Citadel can't just say we don't have them. What do you want us to do? This is where margin calls and liquidations come into play. They recall the shares. Citadel has to go find them. So when BlackRock recalls the shares, Citadel has to go find them. Well, why? That's making a huge assumption. Making the huge assumption that Citadel is borrowing shares from BlackRock to short. So that's pretty, stacked up assumption. And buy them on the open market. That's what they have to do anyway, all the time. That's why you got FTDs. Thus moving the share price up. Citadel can't just say we don't have them. What do you want us to do? That's true, I suppose. That's true. But this is where margin calls and liquidations come into play. Not sure how that connects. BlackRock is the country's largest real estate holder, and since 2008 they have purchased over $62 billion worth of American housing, and the government is now allowed them as one of the backers for the USDC. USDC? So as I hope they crumble, I foresee them getting government assistance if they need it. I do hope I'm wrong. 16 times 40 million is 640 million. 64 million out of 8 billion. 8 trillion. 8 trillion, yes. 8 thousandths of a percent. That is only 8 thousandths of a percent. That is like a 22 bullet hitting a tank. Right. So, we didn't point that out at the time, but I did. The thought did go through my mind when he talked about 40 million shares as if it was like going to impact things. Shit. Remember when Charles Payne talked about, I think he was talking about $90 million or something. It's like, okay, that's not that much. Love you and your analogy. The landlord must now spend time, money, and effort to find a new tenant, and probably had a backup plan anyway, so it's the renter that's screwed if we look at it that way, unless that renter was also prepared to find a new place. Well, that's not a apt analogy anyway, but only solution is to come to us and buy back to give to BlackRock. Maybe that's why they are knocking the price down as low as they can. But as the price goes down, the short positions gain in value, so don't know why that would be the case. Just got a notification from Robinhood asking me to turn on share borrowing. Is that real? Don't know. Don't know about that. Now, if you have a margin account, probably. I borrow. Anyway. Didn't think you could turn that on and off in Robinhood like that. You know, have a margin account, they're going to do what they want. Otherwise, you have to go to a cash account. Okay. Now, there's not a lot of stuff out here today. I mean, used to be that there was a lot of interesting shit that would come out over the weekend. Now it's just all the same shit all the time. Did AMC just reveal that there are 10,498 registered holders of AMC stock that own the entire float of AMC? This was at the bottom of page 4 of the annual shareholder. Okay, so link provided. Good. All right, let's look at it. Take a look at it. Look at it. Just look at it. Hey. What is this? I'm not. Annual meeting. Where did they say it was? No, they didn't. How votes are counted. As of the close of business on April 21, 2022, latest practicable date. Before the filing of this proxy statement, there were 516 held by 10,498 registered holders. Thus, the holders of at least 172 million shares of common stock must be present in person or represented by a proxy at the annual meeting to constitute a quorum. Okay. Let's find that in the actual document, though. Here it is. Right. Registered holders. I don't know what they mean by registered holders. Registered holders are stockholders who hold their shares directly with the company and have their names and addresses recorded in the company's share registry, which is maintained by our transfer agent, Computershare. Oh, wait a minute. Wait a minute. So that means that when they're hyping this, what they're actually saying is that there are less than 11,000 people who've transferred their shares to Computershare? Is that it? I think we just got our answer on Computershare then. Here it is. Registered holders are stockholders who hold their shares directly with the company and have their names and addresses recorded in the company's share registry, which is maintained by our transfer agent, Computershare. Registered stockholders can vote. Okay, beneficial owners are stockholders who hold their shares through a brokerage account, bank, or other record holder. You may have also heard the term held in street name. Okay. This talking about how you vote if you are this type of shareholder as opposed to this type of shareholder. If you're beneficial, you should reason. Beneficial. Wish to attend the meeting. So, in Vision Reports, DF King, Directors, Ernst & Young LLP, compensation of named executive officers, say on pay vote. Requires approval. Okay, so then yeah, what they're saying here is this 10,498 registered computer share owners owners registered on computer share for an average of 49,320 among those 10,498 holders. But that doesn't, you know, we can't really make that calculation. It's not predictive. It's just an average. So here's another one from an hour ago. Probably should make a video on that separately. How votes are counted. Here's the section. The key here is registered holders. That number is the total of institutions and DRS retail. If you weren't DRS, then the holder on file. Okay. So they explain it correctly. Don't want to be that guy, but that doesn't mean the float is owned by 10,498 holders. It's poorly worded. Well, of course it's poorly worded. All their shit's extremely poorly worded. Terribly worded. Almost, you know, misleadingly so. Where does AA get the 4,000 number of holders from? That's a good question. So really it's not relevant, really. I do believe this is roughly in line with the estimates from the Say Technologies vote too, isn't it? Edit, I just double checked, and this is actually a much smaller number than the estimates from the Say Technologies vote, which should only make your tits more jacked. Well, yeah, of course it's smaller because most of the shares are held in regular brokerage accounts, not DRS. But it's kind of an irrelevant measure as far as comparing it with the Say Technologies vote. If I remember correctly, 1% voted, almost 2%, registering a total of 10% of the total shares. Check link in my first comment. I estimated 433,000 apes owned 100% of the company, which would mean we could own. Okay, that's. We're owning 100% of the company. I mean, that's just coming right out of your ass. Where's this link? I don't see a link in the first comment. Anyway, the board will not get any compensation from me. I'm voting no on their raises. But let that hate out on me, brethren, but no one's getting another penny until Moass. No one's getting another damn penny. The price of bread went up. Nope, not another penny. Always vote no on compensation. Executives, no matter how good they are, put in minimal effort. Everyone under them carries the cost, their cost. They are a small group of incestuous buddies. passing chairmanships and executive roles between themselves with the complicit agreement that their goal is to funnel as much money up and out as possible. Success of the company is irrelevant under these circumstances. Pretty strong words. Vote no on compensation, apparently. Not financial advice. Let the blame game begin. The blame game. Warren Buffett rips Wall Street for turning the stock market into a gambling parlor. Right, that's right. They had their meeting this weekend. Berkshire Hathaway CEO Warren Buffett lambasted Wall Street for encouraging speculative behavior in the stock market, effectively turning it into a gambling parlor. Spoke at length during his annual shareholder meeting Saturday about one of his favorite targets for criticisms, investment banks and brokerages. Quote, Wall Street makes money one way or another, catching the crumbs that fall off the table of capitalism. All right. Quote, they don't make money unless people do things and they get a piece of them. They make a lot more money when people are gambling than when they're investing. Sure do. Did he talk about hedge funds? Let's just see what's out there. Two T's. All right, two T's. If you offered me all the Bitcoin in the world for $25, I wouldn't take it, he said. All right.
Well, I shouldn't answer any questions on the subject, but I will. There's all kinds of people watching this that are long Bitcoin, and there's nobody that's short, and nobody wants their windpipe stepped on.
By the way, I wish that there were somewhere,
but I would say this, that,
or maybe there is, and I just don't know about it, to short cryptos, other than having to do it through like an Ethereum blockchain, to directly buy either short tokens or short them without having to have a huge margin account. I would be doing that.
If the people in this room owned all of the farmland in the United States, and you offered me a 1% interest in it, and you said for a 1% interest in all the farmland in the United States, pay our group. Well, let's see, 10 trillion. Pay us this bargain price, $25 billion. I'll write you a check this afternoon, $25 billion. Now I own 1% of the farmland. If you tell me you own 1% of the apartment houses in the United States, and you offer me a 1% interest, so I'll have a 1% interest in all the apartment houses in the country, and you want whatever it may be for it, then call it another $25 billion or something. I'll write you a check. It's very simple. Now, if you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. I mean, maybe I have the same people, but it isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. And if I've got all the Bitcoin,
good point, isn't it?
I'm back where whatever his name was, who may or may not have existed, was 15 years ago. If I've got it all, he could create a mystery about it. But everybody knows what I'm like. I mean, so if I'm trying to get rid of it, people will say, well, why should I buy some Bitcoin from you? I mean, why don't you call it Buffett coin? Make your own or something. What? Do something. But I'm not going to give you anything for it. And you'd be right, incidentally. But that explains the difference between productive assets and something that depends on the next guy paying you more than the last guy got. Now, net.
Greater full theory.
If you look at it, a lot of commissions have been paid, and there's all kinds of frictional costs that are very real that somebody has paid to a bunch of people who facilitate this game. But whatever one group of the public has taken out, or one group of owners, has come in from other people. I mean, it's other people have entered the room and they move money around, but no money there's no more money in the room. It just changed hands with a lot of maybe fraud and costs involved and, a whole bunch of things. You lose, you forget the numbers or forget the equation. You can do that with a lot of things. I mean, it's been done throughout history. Certain things have value that don't produce something tangible.
Like AMC.
I mean, you can say a great painting probably will have some value 500 years from now. May not, but the odds are pretty good that if it was a big enough name, at some point, there will be a few things. I mean, you can find something. If somebody wants to sell you a pyramid or something, and you can charge the viewers, or it'll be around a long time and won't produce anything. But people will find it interesting to go there because I've read about the pyramids. But basically, assets to have value, they have to deliver something to somebody, and there's only one currency that's acceptable in the United States. I mean, you can come up with all kinds of things. We can put out Berkshire coins, or we can put up Berkshire money or anything like that. But we get in trouble, I guess, if we call it money. But in the end, this is money, and there's no reason in the world why the United States government, whose currency people prefer, there's just under 2.3 trillion just of these little pieces of paper floating around some places, 7,000 for every man, woman, and child in the United States. And of course, most of them probably aren't in the United States. Who knows? But this is the only thing that's money. And anybody that thinks the United States is going to change to where they let Berkshire money replace theirs, is out of their mind. I mean, so anyway, with those few deficiencies, you can, whether it goes up or down in the next year or 5 years, 10 years, I don't know. But the one thing I'm pretty sure of is that it doesn't multiply, it doesn't produce anything. It's got a magic to it, and people have attached magics to lots of things. I mean, the gold in Wall Street, create magic.
This comes to mind. But
we are not an insurance company. We're a tech company. Well, they're an insurance company, but a dozen people or so have raised a lot of money. They just say, just don't pay any attention to the fact that we sell insurance. We are a tech company. Well, in the end, they wrote insurance, and overwhelmingly, they've lost a lot of money since then. You can make up things that work well in getting money from other people, and that's why.
Right on. There's some good Munger quotes too. Okay. Obviously watched this top one earlier.
Keeping the American industrial machine working. Charlie, have you got any comments on that as to how something this crazy could have happened?
Well, it happened. It's almost a mania of speculation that we now have We have computers with algorithms trading against other computers. We got people that know nothing about.
By the way, the apes should be paying attention to this. They absolutely should.
We have computers with algorithms trading against other computers. We got people that know nothing about stocks being advised by stockbrokers who know even less.
I understand the commissions, though.
Yeah, it's just an incredible, crazy situation.
These guys come to mind.
It's weird that we ever got a system where all this equivalent of casino activity is all mixed up with a lot of legitimate long-term investment. I don't think any wise country would have wanted this outcome. Why would you want your country's
It's like that before, though. It's always been like that.
to trade on a casino basis to people who are just like the people who play craps and roulette in the casino? I think it's crazy,
Jesse Livermore.
but it happened, and it's respectable. Not with me, but with other people.
Yeah. Well, and look at what the country. I mean, they formed the New York Stock Exchange in 1792 under a buttonwood tree, and it really didn't seem like that was the eureka moment in America. But just look at what's happened using the system for less than 3 of my lifetimes.
Look what happens. I put on the old guys and everybody
it's
leaves.
Unbelievable.
What do these guys know?
It's worked. Now, maybe it's worked in spite of itself, maybe with the country. But one way or another, America has worked in an incredible manner. Nobody could have dreamt it. Nobody. They'd have hauled you away if you said, in 3 lifetimes, this place where we're meeting. I mean, it became a state in 1867, but 1789, and it asked Ben Franklin or somebody that was walking out of the Constitutional Convention, what do you think the prospects are for Nebraska? It's unbelievable what's been accomplished, and it's been accomplished.
It's been accomplished. Well, then here's what you have now, according to Charlie Munger. Here it is.
Oh, Kringle, I have a question for you. When all of because you're in the world, I'm not.
Clearly not.
When all these people are using like basic fundamental analysis to make investment decisions, isn't that really, really stupid? That's just not how the market works now. So when we see all these shorts come out and be like, oh, debt, PE ratio, PEG ratio, enterprise value, all this stuff, isn't that just dumb?
Isn't that just dumb?
Warren Buffett has $150 billion worth of cash right now because he can't find anything that's undervalued that he can buy. So he just does some share buybacks of Berkshire. I feel like they're using outdated metrics to try to place invest capital. And I just think that's stupid.
I really, 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 really hope you never procreate because you are the dumbest person in the world. Keep being stupid because when you're stupid, I make more money. And that's I appreciate true. That very much.
We like that, yeah.
Right. All right.
Paul, show our viewer at home the difference between real and fake due diligence and research.
Hey guys, first, what is fake due diligence? We encounter this all the time when people tell us you didn't do due diligence, or we hear it about out there. First off, due diligence is not going to Google and typing in the company's ticker symbol and seeing what the news is on the company currently. That is not due diligence. Is that a component potentially? Absolutely. But don't mask reading articles about the company as doing full due diligence in the company. 2, analyst ratings. Guys, I don't trust an analyst as far as I can throw them. Are there good analysts out there? Absolutely. But in general, the masses of analysts are going to be just as wrong because they have career risk, just like most people out there. They're going to give ratings because the stock is up, and they're going to write sells because the stock is down. That is not fundamental investing. That is not due diligence. Number 3, your friends and family giving you advice. Please, Lord above, who I love so much. Yes. If your friends and family give you advice, if you're going to take it, write me a check. Yes. I will keep it in my bank account for a long time, and I'll give it back to you in 5 years when you've learned your lesson. It is the worst place to get financial advice. The absolute worst. I have had so many arguments with family members saying, what, you're not going to take advice? No, I'm not, because you're stupid. Well, Paul, I'm really smart. I have this degree. I don't care. You don't understand investing. Number 4, liking the company and their product is extremely different than owning the stock and liking the stock. Fundamentals are driven by what the company is doing. The stock price is going to be driven by people liking the company. Those are separate things completely. Don't mask your love for iPads as a reason to go buy Apple. Does that mean Apple's overpriced? No. But don't have your love for the company. If you love Ferraris, don't go out and buy Ferrari stock. That's not the reason to buy Ferrari stock. You want to buy it based on fundamentals, and is the stock price selling for less than intrinsic value? And the final one, and the one that aggravates me the most, there are very few YouTubers, I can count them on one hand, that have a real process. And unfortunately, they're not the big ones. The big ones do not have a process. They got big on one stock, they got big on one video, and they had to make a career out of making videos. So they're going to say whatever they need to say to get your attention to listen to them. While we look stupid for a while, they're going to look smart. But at the end of the day, if that is your due diligence, that is a problem because they're no smarter than you. They have no process, and that's the scary part.
So, Paul, you've been investing for 20 years. You have $100 million in assets, real estate, stocks. How do you do research on companies?
This did not happen by a fluke. I start with the numbers first and foremost. We created our software here for that reason. I wanted to be able to efficiently look at numbers and see if it first fell in the wheelhouse. Guys, there are 10,000 stocks out there. My time is limited. I have to be able to build a screener to screen out the garbage stocks first. That way I can focus on the ones that garner the most attention. That is what matters to me most. If you don't do it that way, somebody's basically asking you, hey, do you want to buy a car? And you say, sure, and you buy whatever car they give you. Well, it depends. Are you selling me a Ferrari for a Chevy price? Are you selling me a Chevy for a Ferrari price? There's no difference with that. So our 8-pillar process that I created and created the software for is what I start with. So take a company like Apple, Seth.
I love it.
And you love Apple. Why? Because it's your joke. What do you have at home?
Yeah, like I said, I have 17 iPads. I have 3 iPhones. I mean, I just love it. I used to not even drink the Kool-Aid, but I'm full board now.
Absolutely. And Seth's 3 phones are for drug deals, his family, and his girlfriend.
Yeah,
Those are his 3 cell
one of the
phones.
burners for sure. Yeah.
Yeah. So first thing I do, pillar number 1, I want the 5-year PE under 22.5.
Why is this important?
This is important because it's going to show growth in the company, but also not overpaying for the growth. Okay. The 5-year PE on Apple is 39.23. That is high. Does that mean I don't buy? Not necessarily. If the company's going to grow 100% per year for the next 5 years, I will gladly pay that number. But Apple is very large. The chances of them growing very fast is very tough. Pillar number 2, I want the 5-year return on invested capital greater than 9%. This is their ability to make money on the money that's invested in the business and that's generated through the business. Check this out, guys. 31.7%.
You want it over 9?
I want it over 9. This is over 3 times more than what I want. Apple does an incredible job of reinvesting the money within the business and making profit on that. Pillar number 3, I want revenue growth. Simple. I don't care if it's $1 revenue growth. I just want to see, is there revenue growth? I go to the income statement. 5 years ago, 230 billion. Last year, 365 billion. That is a check mark. Pillar number 4, I want net income growth over the last 5 years.
This is
Scroll down.
Profit.
This is our profit. Net income profit, same thing. Scroll down a little bit. 48.3 billion to 94.7 billion. Check mark there.
Wow. Shares outstanding is pillar number 5, Paul.
Now, pillar number 5 is our shares outstanding. If you're new to our channel, I talk about this as a silent killer. When companies are issuing shares and diluting you as an owner, I want to see that number going down. So I go here, and I actually go to the end of the 6th year, which is the beginning of the 5th year, 21.88 billion shares outstanding, and currently 16.7. So they are buying shares back. Now,
over the past decade, they've bought back 35% of their shares, Paul. This is $448 billion they've bought back.
So this is a company that generates tons and tons of cash. And when you generate that much cash, how the heck do you invest it? Well, you don't. You reward your shareholders through dividends and share buybacks. And that's what Apple's doing. Pillar number 6. We want to see if their long-term liabilities can be supported by their free cash flow. So go back to our main page. We look at their 5-year average free cash flow, $72.3 billion. I multiply it by 5. That's $361.5 billion. So I want their long-term liabilities to be under $360 billion. So I go to the balance sheet and I scroll all the way to the bottom. Total long-term liabilities, 162. It's less than half that. Jesus Christ.
What does this mean in terms of their debt?
So what this means is if they were to replicate the last 5 years of free cash flow and take all their cash flow and pay off all their long-term debts, they could do it in under 2.5 years. Guys, can you pay off all your debts with your free cash flow in under 2.5 years? Your car, your house, your student loans, credit cards, everything. That's very hard. And this huge company can do it. That says to me this company's going to stick around for a while because debt is the biggest killer of companies when times get tough.
You got a new message there in your chat.
Message.
Pillar number 7 is free cash flow.
Free cash flow growth. Very simple. I go to the cash flow statement, I scroll down, and your favorite Uncle Paul has added this line here because cash flow is cash from operations less your capital expenditures. You can do one of 5 things with it. You can buy back shares, pay dividends, pay down debt, reinvest in yourself, and make acquisitions. So here, 5 years ago, they did $51.7 billion. Last year, $93 billion. Check mark there. And the final metric, like PE, we want a price to free cash flow. So we take their average of the last 5 years, 68.2, and multiply it by 20. And that comes out to $1.36 trillion. What's the actual market cap of Apple? The actual market cap of Apple is $2.6 trillion.
Oh boy.
Yeah. So this screams overpriced. And guys, if you can't do all that math, guess what? The software does it for you.
Yeah, I don't want to do that math. That's hard.
So this is one of our favorite things. All these checks, but the valuation metrics are high. Now, again, this is part of my due diligence. It's part of my screener. So what this tells me now is, Paul, you love Apple's fundamentals. It's just a little overpriced right now. So what am I going to do? I'm going to add it to my watch list. I'm going to add it to my watch list on the software. And I'm going to say, you know what? I'm going to add notification. And it's currently at 160. When it goes below 120, notify me. Because at that point, it'll probably be somewhere in the ballpark of where I want to pay. And I'll just sit back and wait.
How much do you let weigh a conference call, a quarterly conference call on the process of looking into a company? Because they're always very positive.
You know, it's a great question. Every value investor is different. Some of them really look at the conference calls, want to hear what the CEO is saying. As a CEO, I look at it more as a negative confirmation. If I think the CEO and the staff are being evasive and they're trying to avoid questions, to me, that's a confirmation of they're hiding something. I should avoid this. But if they're sitting there and saying, listen, if they speak like Warren Buffett, which is, hey, we had a tough quarter. Hey, we did great. I want to hear that. That's the only thing. What they actually say with their plans do matter. And I do listen to those and I do watch those, but only on companies I'm getting very close to buying. And it's only for red flags of, do I trust the CEO and this executive team? Do I trust those people?
If I gave you a list of 1,000 stocks to potentially invest in, how many would probably get into your wheelhouse?
Right, as this very second?
Yes.
Probably 20, 10 or 20. That's 1% to 2%. And guys, that's what you should be. There's 10,000 stocks out there. You just need to find 20 to 40 really awesome values. And if you find them, you will probably do very well if you find a good process. But going the due diligence route of those 5 things I said, plus that's a terrible way to go. You will lose money. And I just saw a study recently that showed how the average investor performs versus the market. If the market does 10% a year, and with your your financial planner and mutual funds doing 1 or 2% lower after fees or before their fees, the average investor, because of mistiming and being emotional, makes about 2% per year in the last 20 years. That's what I read. That's crazy. So guys, create a process, figure it out, do the right due diligence, and cloud out all the noise. Get rid of the friends and family, get rid of the YouTube hypesters, find the YouTubers that have a good process. And if you like our process, Seth, what can they do next?
Watch this video on our full 8-pillar process.
Okay, here it is.
So I was wrong on all my previous AMC videos, and now AMC is definitely gonna squeeze all the So I was wrong on all my previous AMC videos, and now AMC is definitely gonna squeeze all the way up to $1,000 a share to the moon and beyond. So I thought, as a one-off type of video on this channel, let's honor the smartest minds in the ape community who correctly predicted that this squeeze was gonna happen. Let's dig through the comments on my previous AMC videos where I was clearly a paid shill and paid by the hedge funds to talk shit about AMC. Let's find these people and these comments and congratulate them on their newfound wealth and unlimited amounts of tendies. And what's more is I thought, in the name of New York Angelo, it would be fun to compare these comments on a time frame with the current price of AMC so we can see exactly what percentage they have clearly made. Now, I have not checked in on AMC stock for a while, and I was promised a Lambo. So let's have a look at some of these comments and start off with this one. I'm up 3x. Love coming back to this video, which is sick. I mean, he's up 3 times his money in October. I can only imagine how many Lambos this guy has got now. Let's check the price from when this comment was posted in last October. Hang on. Is this right? I think my computer's broken. It's saying he's down 50% from this comment. This can't be right.
Oh, look, there we have Crystal Ball 93. Wow. Famous over on Twitter. Peter Vigna. That's a name I recognize. I'm going to do one more video here. Since it's been a minute since I've checked in on Trey, I hope he's doing all right here. But all of his videos are so goddamn long anymore. I've been wanting to watch this one for a few days, but I didn't.
Yeah, man. When you have the last 3-4 days in the market that we've had, you start these videos and you think to yourself like, what can you say that's
how
really
am I going to spend this? How am I going to spend this?
I think to myself today, you know, I look at the AMC, I look at the SPY, I look at the broad market. And all you can think to yourself is, man, this thing looks bloodier than my kneecaps when Titan wants to fucking play right now. Guys, welcome back to Trey's Trades. We freaking talk fast and don't skip class. I'm not financial expert. So take what we say with a grain of salt. Let's get into the video today, guys. We're gonna give you a pretty thorough, in-depth update
log scale
on a couple different things. We're gonna talk about AMC, the SPY, and then I'll give you guys a play of the day for tomorrow. And I want to keep one thing in mind as well, and that's super high juiced implied volatility when you're looking at different plays in the market right now, meaning you want to attack quick. You know, all of these have kind of been scalps for these plays of the day, whatever. So if you're interested in that, just be able to pounce fast if that's something that you're interested in. But we're going to talk about the sell-off that we've had for the last couple of days, when I think this will end personally, and then the SPY and the equivalency, this sort of There's a lot of similarities in the way that these things are moving right now.
So this will be fun
that you're
because
seeing.
this was from Tuesday, and we'll see what he says when the selling will end, because we
in AMC compared to the broad market. As a little bonus, Robinhood had a pretty interesting piece of news I think most people should talk about. I know you're thinking to yourself maybe, oh wow, but Trey, Robinhood, this is the great company. I can't even say that. It's a great company. It's so good. I've got something pretty funny you guys will get a kick out of. Then we're going to talk about the SPY, inflation, basis point hikes. Obviously, these have been a very hot topic. The Fed's been very hawkish. We're going to discuss that. China lockdown and GDP per capita. I actually found this to be interesting. This is something that I started thinking about because of Elon Musk, and I crunched some numbers that I find to be interesting amidst sort of this lockdown that China's dealing with, and then important levels. So starting off right off the bat, AMC, right? What's going on with Amy? What's going on with her girl? Why is this selling off the way that it is, right? I've talked about this before. I'll bring it up again. I'm not going to shy away from things that I find to be relevant and true. And what that thing is, the premium difference between calls and puts, right? You look at the current price, it's $50.50 at close. Calls, 69 cents. Puts, drastically cheaper. I mean, you can see 67 and 42 cents for one strike out the money here, 46 cents. I mean, it's very obvious that puts are currently cheaper, meaning that market makers are more inclined to collect premium from the downside. They're more likely to sell puts, which is inherently a bullish thing. But despite that, the stock has obviously been going down. You can see, I mean, I don't have to tell you that. We were down 8.61% today, down 1.1% in the after hours. If you were to look at this on trading view, what you're going to notice is the same thing. I mean, it just looks incredibly bearish. I mean, nothing looks very strong right now. So what's the reasoning behind this, right? Why is everything struggling really the way that it is? And for me, it comes down to a very simple thing. I've used this analogy before. I'll use it again. And this is why I really haven't talked about Amy the last couple days. You know, I kind of gave my rundown on what I think is going on with the market and some of the worries that I personally have, and because of that, you know, nothing's really changed, and it's just been pain, and nothing's really changed from that. But I view it as this, right? And I've used this before. I'll say it again. This is sort of like a beach, right? You got this beach right here, and you've got the ocean. The ocean's usually very calm, very timid, whatever. It's chilling. And over here, you've got some beach goers. Here's a little dude. Here's maybe a little party house. So maybe we're in Texas. I don't know. You got a hotel over here. You got a big apartment complex. And all of a sudden, you see this huge wave coming in. And in this wave, you've got a whole bunch of different things. You've got CPI concerns. You've got rate hike concerns. You've got this China lockdown stuff. You've got tech earnings performing kind of mediocre, and there's a whole lot of things that are in this wave, and this wave has just gotten bigger and bigger and bigger and bigger and bigger and bigger, and now it is starting to come up to the shore. And on the shore, you've got this beachgoer who's just getting freaking butt clapped by a wave. You've got this party house getting butt clapped by a wave. You've got this hotel getting butt clapped by a wave. This apartment complex butt clapped by the wave. Everything gets hit. I mean, truly, the things that will withstand the most damage maybe is like a huge building. Like you've got like a tsunami shelter, so to speak. And even this is going to take damage. You can think of this as maybe like the SPY, right? The SPY is really sort of the shelter in terms of how much damage is done. And everything else is every other ticker in the market. This little beachgoer right here, maybe this is Netflix. I mean, Netflix is taking I think the brunt of everything going on. It should really be a company that, despite any sort of economic problems, survives pretty decently, but that just shows you where the economy is currently at. Here you've got AMC. Here you've got other small mids. Here you've got Tesla. I mean, you just go down the list. Everything's getting hit by the wave right now. I mean, we really have to be able to zoom out and look at the grand scale picture in terms of what's happening. What you're going to notice, if you look at my screen right now, is everything's red. I mean, there's really the only thing green is UVXY, and you know why that's. Anytime you've got mass bleeding, you're going to have the exact opposite of hemorrhaging, which is maybe a Band-Aid. I mean, that's UVXY looks really good. I mean, if you're playing this, you're sitting all right. but nothing's surviving. That wave is hitting every single thing on the beach. It's hitting everything in town. And
okay, we get the analogy.
What's at stake here, and that's what's holding AMC down. I know that I say this this sort of thing over and over, and I've used that analogy before, but it's because it's genuinely the truth. I mean, if you look at the SPY right now and you see sort of the massive correction that we have had, this is painting you a picture, and the picture is massive amounts of fear. The market is very fearful right now. People are not comfortable with the Fed. They're not comfortable with inflation. They're not comfortable with the rate hikes, especially the flip-flopping of the rate hikes. The uncertainty is at an all-time high. I think that you've not seen uncertainty like this in a very long time, and it just goes to show by looking at the strength in bulls. There's no strength. You look at the current chart, sell off, small bounce, sell off. I mean, the bulls couldn't reclaim anything today. It's really just painful to see. And every critical level the SPY's tried to touch has just been rejected. I mean, it broke here, broke back down, rejected, hard sell-off. I mean, that's just the honest to God truth is nothing is holding. And if that's for the entire market, that's going to rub off, sadly, into AMC. There's no beating around the bush here. There's no other way to say it. The only thing that would really be able to combat this, and really what you'd have to look for, is a negative beta. Now, we've talked about this before, but a negative beta is when the buyers of a specific stock typically do not correlate with other stocks in the market. Maybe that means that since this is primarily a retail-owned stock, it wouldn't move like an institutionally owned stock. You would expect this. In fact, I would personally expect this. And the reason I don't think negative beta presently exists is because of the options chain. I think this tool is an opportunity for the volatility and the insane swings up and down that we see on the ticker to happen via market makers and institutions and banks and the like, you know. Options allow this to sort of not act like a negative beta stock, even if it is owned 90% by retail investors, whatever, because of the leveraging opportunity here. I mean, if you load up, you're trading 1 million contracts on a day or a week or whatever it may be. You multiply that by 100 shares, you've got 100 million shares of volume, basically just synthetically created, you know, and that's coming from the options market. So when will this end? You know, to me, the chart equals the SPY.
You're not trading 100 million shares.
It doesn't always correlate. Sometimes you look at the SPY, and sometimes AMC has diverted itself from the absolute. There's no other way to put it. I mean, if you flip this upside down, it looks parabolic. But unfortunately, we can't do that. You can't. Why can't I just? we can't flip it up as upside down. This is just a parabolic move to the downside. When I think AMC recovers, along with small mids, is when SPY stops suffering. I genuinely think that. And I think what that comes down to is where's the price in end, right? Where do people feel comfortable with, okay, we've priced in the uncertainty of how the Fed is treating inflation and how the Fed is treating rate hikes and how the Fed is sort of reacting to a lot of the different things that are happening in the economy right now. And that's kind of my take. I mean, you really sort of, you're singing Jesus, take the wheel until the sell-off ends, until the pain ends. Everything is going to suffer until the pain ends, you know? And there are ways to combat that. You can play puts on XYZ stocks. You can hedge against your position. You can protect yourself from downside. Whatever you want to do, it's entirely up to you. I'm not here to tell you what to do. But this is just the truth, you know? As much as I like the setup, AMC has had a solid opportunity, lots of opportunities to bounce. I read the chart, and the chart is what it is. There's opportunity there. The market's just not strong enough. It's not. And if the market's weak, AMC is going to be weak. That's just the absolute truth here. So,
wow.
I think sell-off ends when the SPY sell-off ends. When you get a nice bounce here, you're going to get it in AMC. Which brings me to the SPY, right? Actually, at first, I'm going to read you this because we got to split up. Take a quick breath of air. All right, we're coming up from the depths of the ocean. You can take your scuba diving mask off. Let's read this. Robinhood will cut about 9% of its full-time employees. Now, to say that I shed a tear of happiness, to say that that I got a half chub in my wiener got a half chub reading this news, be an understatement.
Gross.
Because fuck these guys. That's why. Robinhood can suck the skin on my nutsack. Robinhood will cut about 9% of its full-time employees, and I think this is point hikes. We already know this. To sort of what's taking HOOD. What you'll notice is it's at 9:55 in the after hours from a high of $85. Charles Gasparino. Anywho, let's move on to the next stuff. What's going to be important to pay attention to right now for AMC and for everything in the market is really going to depend on the SPY. The SPY is a reflection of what buyers, both retail and institution, think of the economy, their reaction to the economy, their reaction to sort of what's taking place on a day-to-day basis, right? And right now, people are fearful. There's a lot of fear. And this comes down to a couple of different things. Big things, obviously, inflation and basis point hikes. We already know this, but inflation's been pretty gnarly. And many speculate that this has not quite peaked yet. We saw an 8.5% inflation rate coming from the last CPI data, whatever. And because of this, the Fed has been very aggressive. They've taken a very hawkish stance. They'd like to add 2 potentially 50 basis point hikes, which is aggressive. It's more aggressive. It's more hawkish than the Fed has initially led on to investors. First, they said inflation's transitory, and now they say it's the Putin inflation or whatever, as if we didn't print off 80% of all money in existence, which is $16 trillion. That's how much was printed in the last 2 years, as if that didn't happen. But I digress. Nonetheless, this is really the 2 big concerns, right? Is this going to be enough? Is the Fed going to stick to their plan? Really, I think it's that. Is the Fed going to stick to their plan? And is this actually going to help out inflation? My gut punch reaction, if we see inflation come out and it still hasn't peaked with this next CPI data release, I think they might even be more aggressive. They initially hinted at maybe even a 75 basis point hike, and they took that off the table real quick because I think they saw how the market reacted to that and didn't like it. But I think that that's not off the table. I think that they may end up doing this if inflation still continues to rise. Will it? I don't know. I'm hoping for stagnation. I think if it's at 8.3%, 8.5, even 8.6, that's pretty good.
No, it's not 8.
I think that's a sign of at least a slowdown in the rise of inflation, but it is a lagging indicator. I mean, it wouldn't surprise me to see that continue to rise. I think that inflation is likely worse than we're being led on to believe, and I think that most of the market realizes this as well. So these are uncertainties, right? Let's just make a list of uncertainties and what we have to sort of get rid of. Combat inflation.
Wall of worry.
Off a quick piece of this. As China reels from its COVID-19 lockdown efforts, its leaders are scrambling to stay ahead of the United States on economic growth. China's actually growing at a faster economic pace than the United States is. Now, this may seem kind of goofy because you look at the Chinese GDP per capita, it's $9,771, right? It's drastically lower than the United States, which is $62,790. The difference, however, is population. China's got 1.39 billion people, and the United States has 326 million, which comes out to an economy as such. You would take the GDP per capita, you would multiply that by the population, you get your total economy of the country. $13.6 trillion for China and $20.5 trillion for the United States. Now, that's a large difference. The United States economy is still drastically larger. However, if it continues on pace to grow, as this is sort of initially, been led to state, China scrambles to outpace U.S. GDP growth amid lockdown report. If this continues on, I think this is a concern that the United States may face. That's not being talked about quite as much as it probably should. I think this is really sort of a very macro concern.
Well, it's kind of our own doing. It's kind of our own doing. But yeah, nobody's going to talk about that. I will.
Watching for a call and for a put situation. Let me just zoom in. I'm going to draw this out for you on TradingView as I find this to be sort of the
more
easy.
drawn candles. No thanks.
Wrap it up with this. Things are tough right now, right? I'm not here to pretend that things aren't tough. because it is. The market's gross. Things look really bad. And this affects real people's lives, your lives. And the stock market can sometimes be cold, and people forget that people are behind the screen at the end of the day and that real money's on the line. So I always like to put out a reminder here, that if you're in a spot mentally or financially or physically where you need to take a step back away from the screen, where you need to take money out of your account to take care of yourself, do it. Do it. I can't emphasize this enough. I can't stress this enough. Fuck the culture thing, right? I know that we have this idea in our minds that no matter what, this is the way. This has to be the way. But you have to take care of you, all right? If you're in a spot right now where you are suffering, take care of you. That's gotta happen. You can't give to others. You can't give to yourself if you have nothing to give. Right? Keep the roof over your head.
You mean AMC shares don't
Make
count?
sure you're happy. These are all important things. So I wanted to take the time to discuss that. And that's what I've got for this video here today.
Wow. So Trey just debunked the Moass. This is what just happened. Trey just debunked the Moass. All right. I'm going to check for new videos, and I'm going to check out my channel statistics, and then that'll be it. Okay. Margin calls coming Monday. Right. All right, and while we do this, let me go ahead and do this. Any one of those live stream console things where you, what's it called, Stream Deck? You just push a button and shit happens. These is good times. Alright, so it looks like we got 496 subscribers. Cool, I haven't looked at this in a few days. Any comments? In so many episodes of American Greed, the con artists made sure to go to regular church, to be regular churchgoers, and that they became known for it. Sounds about right. Okay, go to the analytics. Okay. Few viewers, 68 last hour. At least I had privacy, single and po. With you, I can't even jack off no more. You full of shit. Impressions are up, that's good. Gotta get this higher. Views down 58% in the last 28 days. Well, I haven't been doing as much. Need to make this gotta go up. Let's see. New viewers coming in. Good. Continues to be an overnight / morning. No, I'm sorry. Afternoon, evening. Selfish. When I open your legs, I smell fish. You talk too much to everybody. So flirtatious. That means my viewers have, my subscribers have jobs, right? That's what that means. I don't know. United States. Mostly subscribed. That's good. This number, this female to male ratio is increasing. That's good. It was 100% male for the longest time. Age is skewing older, which is in line with what happened before. I don't know. This research is a new tab. I'm not sure what that is. Spikes? I haven't really looked at this stuff. My retention is bad. I know that. Thanks, Manny. And by the way, I did fall asleep last night. I was trying to take a nap at like 6 p.m. And it's like, that was the wrong time to try that. So I woke up at like 11:30. Just like, ah, shit. So I'll do it tomorrow.
You're so annoying. My career, you're destroying. You're such an envelope pusher. Such a gossip gusher.
I haven't looked at a lot of this stuff. Let's see who the newest subscriber. Oh. Well.
Orgasm fake. Who's fucking up my schedule and they won't give me head? Oh, that's you. You wanna run away with my daughter? Meet a new man in Florida.
Do my last minute check here, because sometimes some good shit pops up right after I finish. I'm like, God damn it. Or Manuel sends me something. I'm like, God, I wish you should have sent that to me 5 minutes ago. Wish I had more of my old videos. I do. I wish that I had them. Sucks. I just replay all those. Okay. I don't even understand what that is. CEO Aaron has done everything right. They've done everything. He's done everything right. By the way, AlgoHack is back on Twitter. So that's cool. Short interest went down, yet the price hasn't moved much. Can anyone explain? Probably not, right? Self-reported, all you need to know. Well, we've talked about this many, many times. It's self-reported by the people that lend them out, not by the people who borrow them. Big difference. Probably because they borrowed a ton of shares and did not use them to short and eventually returned them to mess with the SI. It's also why you see the borrow fee so low. No one wants to borrow them to short. Okay. Short interest has been over 100 since the beginning. Short interest went down and price stays stagnant. Crime. Hiding shorts with swaps, probably. That's a good one. Covering, not closing. Synthetic longs used to close out legit short positions, which in turn moves the debt to the naked short side. Same debt, same consequences, just not publicly visible. They're covering FTDs with synthetic longs. It's okay, we're good. They are still in their shitty situation and are going to get blown out. It's all about reporting for them to hide actual numbers. Who was it that they said that they go all conspiracy? There you go. It's all in the reporting. I'm ready for that life-changing money I've been buying, holding, and repeating since last January, and my only worry is to load up on some more shares. Seen a lot of DD, and all I know is there are some big-time crooks running the market. I'm ready for more hedgies to go down. Wow, it's twice in one sentence they've misused the wrong form of two. That's your new trillionaires in the world right here. Can't tell the difference between two and two and two. And finally, the only thing I care about is taking rich people's money away from them. Fucking spare me from learning anything about these people. Fuck DD and reading boring articles about boring people I will never care about. I don't give a rabbit-sized shit about anything related to stocks, besides checking my computer share account one morning and seeing that my balance increased by 5 digits. I will be proudly ignorant until I get paid for doing nothing besides holding on to the stocks I have. Hope everyone has a good weekend. Hope this gets attention so shills and hedge fund people can see my whole asshole. It's taking money from evil rich people. Fuck 'em, I say, just like they treated us this whole time. It's not so much rich people, but rather taking money from people who exploit and manipulate the system to prevent other people from becoming rich. Prevent. Rich. So then when you become rich, you're automatically evil? Aren't you holding to become rich? I mean, yeah, they said people who exploit and manipulate the system, that's the rich. Well, wouldn't the apes be exploiting and manipulating a system if it actually worked? Wouldn't they? They would. You sound like every other rich asshole out there. Go you. I worry that the limits of collusion and corruption are boundless, and somehow the manipulation can continue in perpetuity. Still holding my 50 shares since $8 in 2020. Well, at least you're at a profit, right? If you want to be rich in our system, it requires corruption and exploitation. Fuck the rich. I know some awesome, very generous rich people. The bad ones. I want their money or whoever's behind keeping this money from us. Or whoever is behind keeping this money from us. Well, you need a mirror to see that one. Well, I've always wondered what would happen if you sent random invoices to hedge funds for things like art or catering or consulting, if they just approve them without checking. We need somebody to try that. Send Citadel an invoice. See if their accounts payable people just pay it. So being rich is bad. Why is it bad? And there we go. Massive talent. It's a must. So this subreddit has pretty much turned into a I don't even know, just a big bitch fest and advertisements for movies. Oh, we didn't look at that CS Trades Wolfpack thing. So I don't know if this is, there's not really that much new on this. Chris was talking about it here in this stream earlier. And I watched this stream right here the other day. And there's a lot about this WebEx client that supposedly has a backdoor function in it and yada, yada, yada. Obviously, there is a new version of that software that's not exploited. So was CS Trades directing people to download a compromised version? Is that what? I don't know. I don't know if there hasn't really been anything else on it. Maybe this right here will be just a good video.
Hello, Froggy Styles here. We're going to be talking about CS Trades Wolfpack on why he hasn't been welcomed back to my Froggy Styles show. Because there was an incident that popped up about 2 weeks ago. There was
So what we're seeing here is just the further splintering and factionalization of the AMC grifters. And this is admittedly on a B or C or D tier level with these guys. Like these aren't like the you know, the main influencers. Froggy Styles has 3,000 subscribers. So just to put it in perspective, but you know, the big guys, they don't listen, they don't care. You know, I've been shitting on Trey since last August, you know, and he's never once acknowledged my existence. These guys, but these, you know, these C and D tier influencers, wannabe influencers, you know, they do collabs and everything, and you know, so it's a different little bit of a different world. So we're seeing in that sphere these guys break into factions, and you know, it's just interesting.
Messages that I got saying that
you can't have 24 cult leaders, I guess. I don't know.
CS Trades was plagiarizing other people's stuff. I asked him, I said, is this true? He denied it. And I said, you know that I'm not cool with any of that stuff. If that was true, you know I'm going to have to separate. So I wanted to make a video the following week because he ended up playing a video of the Volkswagen squeeze, which I didn't know that he had posted up on his channel. Because it's from 8 months ago, and I just started talking to Cam about maybe 3 months ago. So I never went back through and checked all of his videos or anything like that, so I have no idea that this thing even sat here. So he's playing it, and he goes, what's this look like to you? And my other buddies were there, and we said it looked like the AMC stock pattern. So the discussion came up is I need to get the actual content for it so I can make a video comparing Volkswagen squeeze and AMC's chart pattern because it looks similar. And I said, if not, at least give me a screenshot of it so that I can use it and put it in a video. And of course, my request was ignored. So I'm talking to my new co-host, and I said, hey, you know, I need to get that video so I can put that out there. I said, I'm trying to figure out what to do. He said, you're smart, just figure it out. So I went to Google, typed in Volkswagen live squeeze. Boom, it popped up. Here it is. Popped up by the Walrus on Reddit. So I figured, it's got to be good enough. So I went and pulled it up, and I figured I'd do a chart comparison video. And here it sits. AMC comparison video, Volkswagen squeeze. That's it. And I also added a lot more information because you can see this video here is 16 minutes and 11 seconds long. The last two-thirds of it is information talking about the Volkswagen squeeze on how it came to be and a comparison of where AMC's at. This one here is only like 6 minutes and 12 seconds long, or however long it is. It's not very long. So I used about 5 minutes out of the clip, and I stopped it shortly after this pattern popped up. I showed a little bit of continuance where it ran up and squeezed, and that was it. So I get a message from Cam stating, why are you using my squeeze video? And I told him I got this one off of Reddit because I needed to do it for the comparison video. So he says, don't you think you should be asking me to use it? And I said, well, I'm using the Reddit one. And he says, it's been redone. Well, it doesn't matter if it's redone. I'm just trying to get the pattern. I don't care whose it was. I'm using the pattern to prove AMC's pattern looks identical to this. We just lived this where it ran up to 34.
And kind of the irony with this whole situation is I think that fact that he was trying to prove that AMC squeeze is similar to Volkswagen, that has gotten completely lost in this whole thing. Because now it's about how this other guy is a jackass and a liar and potentially a fraudster and stealing people's information. So it's interesting for that reason too. This is obviously talking about his, supposed plagiarism. The WebEx thing and the supposed like worm or virus thing was in the video from 5 days ago or whatever. But let me get
came
through
all
a
the way
little bit
back
more
down.
of this.
I wanted the pattern. So after he made a big stink about it, and I have all the proof of it, I've saved all the messages. So he's over there telling me his video is 8 months old, which it is. It says right here, 8 months old. So I didn't think nothing about it. I went and looked, and it says 9 months old. And I'm like, well, this one's older. If his is the original, then how does this one exist? Somebody in a time machine must have took it back there and dropped it off. So he's saying this one over here on Reddit, Teddy Zane stole it and zoomed it in and doctored it up and redid it. This one looks to be more original. It doesn't have a mouse scrolling around on the screen. It doesn't say CS Trades on it, and it's a month older. So I'm like, dude, this looks to be more original than yours. So I had somebody else look into it, one of our other partners, and they agreed that it, obviously Cam's was posted, CS Trades, his was posted after this one. So then, instead of coming and proving that he had the original, it was his, he got all mad, went on a server, and told his wolf pack to come and attack my channel and unsub. So I'm just sitting there thinking, like, unprofessional and childish, you know? So I'm getting these comments down here. Right here, Christy comes up and says, you can watch the full content regarding the Volkswagen squeeze here if it's useful. Here is the original content. How is it the original content when it's a month older? If you take somebody else's content, claim it as your own, it's going to be older than the original content. So she's pushing this narrative that his content's the original, even though it's older. It's not as old. I said, did you look at the Reddit video yet? She said, of course. I said, what did you come up with? Same as has already been pointed out. What's been pointed out? How does a newer video become more original than the older one?
Magic.
So I said, I think Cam should address this and be honest and prove what's true. I had someone look it up, and they came up with Cam's was posted after. He did not know about the one on Reddit posted before his. He knew I wanted to do a comparison of the two, so I had to go find it. I will be posting a video about this mess tonight. Here we are. So now she comes up with this story. So 4 times my reply has been deleted. No, I purposely left your messages up there because if you're going to come over here and run
my
your mouth,
replies were deleted.
then
Excuse.
why delete it? I want people to see how you're treating my channel unprofessionally. I hope it's not because you are interested in information that does not match your narrative. I said, I have deleted none. I am purposely leaving all your messages up. She doesn't understand every time she posts something on here, it is proof that they're still attacking me for putting out the older version, the more original content that is not Cam's. Now, if he does have the original content, it should be easy for him to prove that this video is his. It should be very easy. But I'll give him until tomorrow at market close to provide proof that the video is his, unedited, without any kind of like
Volkswagen misspelled.
If you have the full screen, you should be able to post it. I will provide links for this, and these comments, so you guys can go view for yourself and see how unprofessional he has been acting when he got caught taking some.
So that's that. Now, you saw the videos that were on his channel. This is all that's there now. And if you go to the playlist, these are all private. All these videos are private. Members only. So that's cool. Now, as far as this other thing goes, they really should cut this down into clips.
I come out and I'm going to tell people what he's doing, he's going to call me a liar. So I knew I had to go get proof and evidence because I knew he was going to do this sort of thing. So what happened was I sat back and I watched him lie to people. And let me pull that up.
Money off of click videos. Okay, it's squashed. Okay, because you brought it up and you're my guest.
they're right there for each other, you know.
Right there, that he was going to try to lie his way out of it. And I got so many windows open. This is horrible.
Yeah, I just want people to understand, listen, protect yourself. Do some research on WebEx yourself.
But so this is AB Investments. He's asking a simple question of, is there any truth to what's being said? But watch Cam's reaction, and it will prove right there that he was going to try to lie his way out of it. And I knew he was going to do it, so I figured I'd get more proof to basically make sure that when he goes and lies, I can catch him in the lie. Now, this is totally different than the WebEx server, but he knew that I was – he spun it because I ended up canceling him from the show, and he wanted to kick it back and make it look like he was the one that was doing the canceling.
Is that we're all different, right? And it's hard to all get along. It is, for sure. It takes work, right? But there's nothing wrong with work, right?
Exactly right. That's like brothers and sisters, you know. They fight and fight and fight, but
brothers and sisters,
you know, when somebody from the outside tries to come against them, then you know they're right there for each other. You know, they don't let somebody try to bully them or you know whatever. You know, they stick up for their brother or their sister. So yeah,
that's for sure. Which actually I was gonna ask. I don't know. You know, Cam, you don't have. You can brush this question off if you'd like.
No,
but
go ahead.
What was it with that froggy guy? Because is that what you were referring to earlier?
I'll touch on it a bit. It's just that the Wolfpack has a code that they go by. That we don't really stuff like that just bounces.
A code.
Okay. So
but no, it's okay. I'll touch on it very lightly. It's. How can I put it? No, it's okay. I'm gonna touch down on it once, okay? And it's squashed, okay? Because you brought it up and you're my guest. I don't bring up things unless you're my guest, so I will answer it. What it was I was on his channel a while ago, okay? And what was happening is a lot of burning YouTubers. Putting YouTubers down constantly, and we don't roll like that.
Him confused with me. What?
And the thing is, I'm trying to say this with passion behind it because that's how we roll. I just want to make the Wolfpack aware of that. I'm going to speak from my heart, not from my mind. So what I'm going to say is, I came onto his channel when he was putting down John Snipin. Notice I came on for half a second and I pulled off that day because I don't roll like that. The Wolfpack does not roll. I felt very uncomfortable putting down another YouTube creator, and that was it. I was done with him. So then he spit it on me and saying, oh, wow, this guy's broad. Look at this stock. Look at this. Trying to pick us apart. You can't pick the Wolfpack apart, my friends. It is what it is. We're OGs. We're like original YouTubers here, right? My channel's old. It is what it is. And I'm just going to leave it at that. Either you hang with us or you don't. We're not going to get out there and start making bait videos back. Those are click videos for clickbait. We don't roll like that. I will not live upon another person to put them in misery and try to put them down and try to make money off of click videos. We don't roll like that. We stand stronger. We don't roll like tadpole, right? So
I'm sorry, I'm not laughing at what you're saying.
Yeah, you're saying the comments, but
these comments are just outrageous.
I'm not even make a video on it at all. It was inevitably brought up. I talked with the mods and stuff this morning. We're just going to let it is what it is. And yeah, it's just, you're a guest and you brought it up. So, it is what it is. So yeah, after this, it's squashed. The Wolfpack knows how we are. Like I said, we're wolves, not sheep. There's just some people that just don't get it in the world. They just don't get it. And I don't wish
All right. So what I should have probably explained there is he basically lied to AB, telling him that he left the show because I was bashing John Wick. Well, I have the actual footage of all that proving that he also lied about that. And the other part is I put a video out saying that I put the original Volkswagen squeeze video out that was not his because he plagiarized the original one that should have been like the one he's using that got 22,000 views was plagiarized off of somebody from Reddit, and he claimed it was his. And I said, if you have the original one, put out proof that you have the original one. And they gave him 1 day. Now he's claiming he talked to his mods, and they agreed that he don't have to put out a video to prove that he has the original. So he's known for doing some shady stuff, and I don't want to call it out for exactly what it is because you have to do allegedly as a term, but obviously he was using somebody else's stuff, claiming it was his, did not want to provide proof on it. So he's spinning it because he got caught. Now, as he's telling AB that I was bashing John Wick, let's go see who actually brought that up. Let me pull up the video here. Give me a second. It's one of them. It's this one here. Let me mute my mic. This is him actually requesting for me to go and bring up the video talking about John Wick when all that stuff happened. I had not a clue what was going on.
Neither did I. And, you know, I'd like to reach out to John Wick and just let him know, you know, I agree with him on most of that. And if he thought I was attacking him, I really truly wasn't. And no harm, no foul.
Yeah, let's play the video real quick.
Morning and everything. Froggy, have you watched that John Wick thing?
I've heard bits and pieces about it. I didn't get to watch it. I mean,
everybody's just riled up across the social media over it. How long is the video, guys? I don't even know.
When did it come out?
Today, or it's against about. I'm just gonna say the gist of it because I have not watched. I can watch it on the side here while we're doing this, and it just something about selling AMC and all this. So I don't know. It's pretty bad, supposedly. Okay, I don't know. I know the person. And I talked to him, and I've never had any bad things to say about him. I don't know. Are you looking at it right now, Froggy?
Yeah, I pulled it up.
How long is it? How long is
like
it?
13 minutes.
We will get to the bottom of this, my friends, for you, for sure, because it does affect us.
Okay. All right. So right there, you can see he's requesting me to go do a video on it and cover it. So I had not a clue what was going on. I wasn't too worried about it to begin with, but I got a lot of questions in my stream about it, and he's claiming that his members were talking about it and whatever. And I'm like, okay, so I'll make a video on it. So I decided we're going to do a live stream. Let's go watch the video. It was supposed to be meteor for sure. And
so he's got text messages and whatever else.
Of it.
Okay, this was a good comment here.
Content creators finding individuals scrolling around. This is the and do it and refuse to make to hack his computer on who he hack, and I couldn't find it.
On CS Trade's live stream 1 week ago.
So this program, Common Sense Investor says, wait, are you telling me this program Cam had us download lets him get in my computer? That's exactly what it is. Here is your link to the rat information. This is a newsletter, and I'll let you guys go and dissect it and get to the bottom of it. Or it's not a newsletter, it's an article about it. Tony, go ahead and dig into that information right there. It will tell you, and I'll pull it back up here so you can look at it real brief.
Okay, so, and if you want to look at that, what you could do is this. It's not right. You can just do it since it caused so much problems for them. And I could clip it out as a separate video later. Okay, maybe we'll start here. Okay. Guess we need to go intraday, huh? I don't know if it'll let me go back that far. Oh, shit. Are you serious? Wow, cuts it off right there. But you can do it daily. Daily, back to here. There it is. Oh boy, there it is. There it was. It's too fast. Ready? Guess it's still a year away. That was the mini squeeze. Okay. Oh shit. Oh shit. And you know we should just have it on this. There it is. That's what they were fighting over, but anyway. Will be interesting to see what happens with this. Tony said he's coming out with a video about it tomorrow, right? Or today or tomorrow or something. So maybe we'll check that out. But factionalization, the splitting apart, the well, you know, the grift is probably coming undone on some level. 497. We gained one. All right. I'll catch you tomorrow for the futures opening. Otherwise,